opened up around 32, closed at 29. So literally plus minus 3 points on the day. Ended up grabbing a nice winner on daily profit play. So we'll take that. And I'm just putting this in my tracker for, I believe we had the live trades updated. Yes. Okay. So the ATR tracker tab, I'm putting in the update. There we go. And that was a yes, yes. Get the screenshot here. Copy link. All right. Close price 6829. And we will adjust this to the close at 6829. Okay, so adjusted, we have a VIX around 16.94. I'm going to keep an eye on this morning before we start calling some highs and lows. We did have some disappointing news this morning. It was ADP non-farm. Came in pretty terrible. So the revision from 42 to 47, but forecasted for 5K came in negative 32. Now, in my experience, ADP non-farm has never really been the major, jobs numbers. But in the absence of non-farm payroll because of our government shutdown, this is about the only, payroll data we're actually seeing. So what is kind of nuts is just looking back. Let's see how much history you can grab here. Are these numbers that bad? This is back in COVID. Let me zoom in a little bit. Maybe 2022. Okay. Obviously, there's histogram bars to the upside, but it's the only jobs data we have right now. So, if anything, this probably just further solidifies the rate cut for December. Maybe even tilts us into Q1 with looking at another cut. That just depends. That didn't look like we are going to see that until maybe Powell is gone in May. We have PMI numbers. This is a services PMI coming out at 10 a.m. Eastern time. So we'll see what that looks like at the top of the hour. Let me go in and see what the Fed Watch tool is showing us right now. It was like 87% probability for next Wednesday. I would imagine it's going to be something similar, if not higher, 88.8%. You can't know the future entirely, but that's a pretty high probability. I don't think that's flipping by next Wednesday. Yeah, markets are liking either going to get a cut. Probabilities, now we're looking at cut December, early pause, and then another potential edge here for April or June to see another cut. This has changed a little bit. This doesn't surprise me. I was curious if this actually happened today because of those weaker non-farm numbers, ADP non-farm numbers. I do believe we are going to get another official non-farm payroll announcement. I don't know if it's going to be the October jobs coming to December or the November jobs coming to December. Will we have that data, right around the Fed or maybe the week after, as well as a reading from CPI and PPI. This week on Friday, we have core PCE. Year over year, I believe, is 2.9. I pulled that from the Bloomberg calendar yesterday. It's right in here. All right, so Friday morning, 8:30 a.m. Or it was weird. It's released at 10 a.m. for whatever reason. We have University of Michigan sentiment. We have inflation expectations all on Friday. The core PC month-over-month 0.2 was previous and the same as forecast year over year. And this will be delayed. I'm not sure what the core PC is going to be. This is September's release. So forecasted 2.9 with the previous at 2.9. Currently, the Fed rate, they're cutting in the week. So next week, Wednesday, they should be cutting, which would bring us down to 3.5 to 3.75. So if our core PCE is still 2.9, apparently that's restrictive. Quick question for everyone this morning. I believe this was a pinch point trade or it was a newsbreakers trade. Let me double check. So pinch point, it's a newsbreakers trade. Did anybody have this trade with me for newsbreakers? We took a spread trade and somehow got assigned on it. But the good thing is the assignment. So we had a November 21st, 145 by 149, and that would have expired on the 21st. So the close price was 146.28. So inside of that bull call spread, I was assigned the shares, and right now those shares are up about $6 or $7. So I'm going to close this out this morning for a win. That was not really how I intended to play the trade. It was a, buy low, cost effective $2 debit for a $4 winner. And either way, we're going to turn this into a nice winner. So that's trade number 96 inside of our newsbreaker service. That should be worth about $600 or $700 of profit. So little, as Bob Ross used to say, happy little accident there. So 145 by 149, good trade overall. We're trading at 150, almost 154. Pre-market's down a little bit, but I'm still going to close this out and just grab the profits. This should be up a decent amount. My break even should be about 147. So 147 break even. I should be up about $600 on the morning. I'll take the profit. So if I can get that this morning at the open, I'll just take it kind of right away. Okay. What's up with SPX futures? We're going to gap down at the open. Possibly. Yep, that was a big flip from futures, huh? Let's take a look. I've got a futures workspace here. Let's go to Chris Pulver trading. Yeah, here's a short-term look. We just had a pretty big drop the last 10, 15 minutes. Here's a 5-minute chart. There was your 9 o'clock candle. So this wasn't related to ADP or anything like that. We just are looking at a pretty big drop. Set to open higher, soft jaws, boost rate cut bets. Well, show that to futures right now because that's wrong. Let's see here. NASDAQ blazing a trail back up. Bitcoin's made a pretty good run. Like that is an ugly, ugly drop for the morning. So, I wouldn't read too much into that. Those are some big candles, by the way. That is a drop of, 0.5% in about 15 minutes. That's not nothing, but that certainly seems like a little bit of noise this morning. So VIX is going up. We'll keep an eye on that today. We have our level set. We'll get an eye for our VIX reading based on the current price, which is jumping. I mean, we went from a 16.3 VIX up over 17 now. Futures dropping. Let's get our gamma reading for the morning. And then I want to spend a couple minutes on income grid. I talked about it yesterday. Figured out the organization of my spreadsheet. And let's go to, where the heck is it? Samurai, there we go. So we have daily profit play there. This level should be marking all-time highs. 69, 22, and 23 all-time highs. NVIDIA candle here around 67.70. So if the market is going to pull back, I mean, it could just continue to drift up until we hit all-time highs at 69.20 and change. We could go after 7,000 and have quite this holiday rally. But if we get a pullback, as long as we're not doing too much damage below about 66.40, okay, this is still, pretty bullish in my opinion. So could we pull back to, this NVIDIA sell-off candle? Yes, that's around 67.70. I could see that offering some pretty good support as the market, might still have destination 69.23 or 7,000 at play. Okay. So gamma levels this morning. We'll watch this in real time because that is a big flip in futures. So futures was literally 0.25% positive, and now it's down 0.3. SPY and Qs, we'll see if we're going to gap lower. SPY is flipped to a negative open. So now we're looking at small gaps lower to reflect the futures price. So we're opening a little bit softer today. And as long as price stays above 68.10, again, pretty good support these last couple days. 68.10, right in here. So depending on how we open, is it going to find support? There's obviously this gap back here. Keep an eye on that. If this maintains a positive gamma, which means we're greater than 68.10, look for that support to hold. Okay. So just kind of let's assess price. Largest gamma, right? Just like yesterday, we tapped 68.25. We hit that positive negative gamma pivot at 68.20.25. We stayed around there almost the entire day. right about the open. So we'll see if price is going to break loose a little bit. Decrease in AI spending. I mean, it's probably not a terrible thing. Market doesn't like it though. Let me see here. I do have broken wing on Microsoft. Small profit. Got a $5 profit trap. So I'm risking $4 to make one, but I have a profit trap. We're opening at 478. This is out to the end of the month, December 26th. All right. So when we hit opening bell, I'm going to close out this team trade for hopefully $600 or $700. We were up to like 153.90 yesterday. I'm giving back about 90 cents at the open. So that will hurt just a tiny bit on those 100 shares. I'll close that out, and then we'll see if the VIX is going to continue to run for the morning. And if it does, just be prepared for some volatility. Okay. All right. So let me do one thing here. I said this yesterday. So here's my income grid. Got the back test tab figured out, and we discussed this. So I'll give you the kind of the rundown of this overall strategy. On a positive note, I've got a date for launch. I think we're going live with this thing January 11th or somewhere around there, maybe within a week or so. So January 11th, launching a new tool, income grid tracker, and I'm still going to continue to deep dive into this because, like I told you yesterday, I'm following my logic to the T. So if we are in a bullish environment, we're taking every buy trade. If we're in a neutral environment, I am staying out. And this is week to week. So, this grid tracker can also work on a weekly basis, monthly basis, quarterly basis. Depends on how passive you want to get. But also you can kind of bump this up and turbocharge this with dailies. Personally, I'm already running zero DC services like daily profit play and double ups through the week. So I will likely stick with the weekly and monthlies. That's going to be my bread and butter for income grid tracker or trader. And anyway, I told you yesterday, this is all about reward to risk. Okay. So here are things that I know that are good for the last 50 plus years. Okay. Since the options market came into play 1973. From 1973 to now, that's essentially your present day market with, modern options. Then obviously you go to electronic trading in the 90s, but we've got a 50 plus year track record here. Okay. So important is this. If we have since 1973 to present, we have about a 55-cent bullish bias daily and weekly candles. So every single day that we trade, there's about a 55% chance that market will be able to push bullish. That's a pretty good edge. If you're looking at trading every single day, which is around 252 trades a year, you have a house edge of 55%. That might not seem like a lot, but over thousands and thousands and thousands of trades, you will be taking home profit. This is how casinos are built, right? American casinos house edge is 56%. They're monsters, right? They collect on almost every transaction. So every week, every day, we have a bullish bias. On top of that, 80% of all trading years are bullish. Okay. Now I know that the bears, when they strike, the bears can be pretty violent, pretty nasty. But for the most part, if you have a horizon that's not today or next week or this, it's like if we just manage risk, stick with the probabilities, our best default trade is to be long these markets and manage risk. Type in a where yes or clear in the chat if that makes sense. Right? And you could probably go back to 1929 if you wanted to, but to me, modern market is options forward, right? 1973 to now. Now we have liquidity providers. Now we have market makers. Now we have electronic trading. So that's a pretty good study, in my opinion. Going back 50 plus years. Okay. All right. Now, that's our house edge. But like I said, I am trading income grid following all of my rules. So I have a macro dashboard, which provides a directional bias, and that is either bullish, indecision, or bearish. Okay. And I'll put an asterisk here because it will trade. If we are in a bullish environment, it is trading. I am trading based on what the tool will tell me to do. So my income grid is going to follow when my trades will fill me at the appropriate levels that I want to trade with a directional bias, with good reward to risk. And I'm trading in every bullish and bearish environment. Now, the last several years go to COVID. Okay. We had a 30+% correction that was over in 45 to 60 days. Okay. Did you have an opportunity to be bearish in that window? Yeah. You had an opportunity to be bearish for about 4 to 6 weeks. Okay. Was it a perfect trade? Was it easy? It was so fast that, I mean, we had some profits, but when that market bottomed in, April of 2020, it was like the bounce back was, I think, what was it? March was our official like COVID bottom. March to April, we already back up towards the COVID highs again. It's just, it's again, I'll do every trade according to the rules. But what's going to be an interesting discovery is, I think if anything, it'll just also help us to stay out of the market. If everything is rolling over into indecision or bearish, the bigger picture shows that if we just wait for confirmation, we're going to make a lot more money, a lot more consistently, a lot longer to the upside, and not necessarily have to be trading both directions all the time. Does that make sense? So bullish, awesome. Like we're winning like 70, 75% of our bullish trades. Bearish, it's like it's 50-50. I think what I tracked so far, we had like 23. This is over like a couple years here. We had like 23 bearish trades and 23 winners, 23 losers. So that, I mean, you didn't lose money even in a nasty market, but it is frustrating when the market can bottom, right? If you're selling and the market goes down aggressively and it finds that low and rips back up for the week, if we're taking on risk here, like I don't really want to lose that trade. And then the nuance is, well, we can manage that trade, right, Chris? We can manage it through the week. Well, we can, but I'm doing this where I take a trade on a Monday and I take the trade off on the following Monday. So if I am bearish here, the market needs to be lower by that following Monday. If I'm bullish, I enter a trade here. By the following Monday, is the market higher? If the market is higher, we're keeping full profit. Okay. So if I'm bullish, I have grid levels that I want to trade. So I'm bullish, I'm bullish, I'm bullish. Everyone is offering a 1-to-1 or better. Okay. And what I found a lot of times is if we get filled on this trade, let's say this trade fills and price goes higher, we get paid here, no fill, no fill. We make money. Okay. If we enter here and price falls through the week, let's say by Wednesday, like Tuesday, Wednesday, but then the market finds a low, works its way back up to break even or better on this trade, we get filled on 2 trades. By the end of the week, if we're back up where we started and the week finishes positive, you have a winner here, you have a winner here, 0 losses, 2 winners, and each one's a 1-to-1 or better. Okay, so long story short, here's the numbers. I've got another like couple of years that I want to finish up on the directional bias. I figured if I can go to COVID to now, that's the market doing a lot of crazy things. That's fast aggressive bearishness. That's steady melt up bullishness. 2022 was also a great time to test simply because we had a 10-month bear market before we finally found a bottom. That was a 10-month period of lower highs and lower lows. And so, unless 2022 absolutely crushes it with results, I think my conclusion when I start to teach this service and teach this tool is when we are in an indecisive zone, if we're indecisive to bearish, it's okay just to stay out and just wait for things to realign and let the bulls, once they're reclaiming, let the bulls run, because you'll make a lot more money consistently and in a longer stretch in a row, like multiple weeks in a row, just win, versus the fast, kind of ventilation, the fast VIX spikes that we've seen where the market has those like really nasty 1% flushes, 3% flushes, 5% corrections, even up to 10% corrections. But within typically 30, 60 days, they're over, right? So I'm not done. I've got some time here, but I'm excited for this thing to go live with everybody here in January. Okay. So here are some of the numbers. Again, this is with bears and bulls. I'm trading both directions here, and I'm still winning 65% of my trades. Now I'm literally 50% with selling. So if and I'm not going to do this for like, optimizing this backtest here, but if I delete the selling, if I delete the bear call spread side, if I delete like being bearish in the market, this win percentage goes up to over 70%, and the profit factor goes up to over 2. Okay, so if every trade we're taking is a 250 credit for a 250 risk, for my VIP members with this tool, I'm gonna teach a strategy where we can also generate more profit in there. So we have a potential to make up to $600 or $700 or more versus a 250 risk. That's a pretty good trade. Okay. Anyway, we'll play around with this. I'm just going to keep showcasing this a little bit, every couple of days, every week or so, as I throw some more trades in it, and we have some more results to show. But so far, it's been a lot of fun. And the nice part about going through this, like week by week and trade by trade and line by line and sticking to the rules, is this is a very simple strategy to teach. And we've got a pretty solid history to go off of. And what's worst case scenario? Absolute chop fest would be maybe the worst case scenario as far as price action. But how we trade this with the grid is we're going to see the ability to survive those weeks when the market is indecisive and still get paid, especially if we're having those trades that offer more reward than risk. Okay, does that make sense? So dashboard is going to be the important thing, because this is probably the easiest way to stay in the path of least resistance and go where the market is. Like the mindset and the sentiment of the market is to stay bullish. Obviously, we have indecision when the market needs some type of catalyst to drive it further. Bearish, what we've seen the last decade plus, is bearish is usually pretty short-lived. Everyone is literally, this year's, it's been another, classic climb the wall of worry, where everyone's so worried about something really bad happening that everyone is bearish. Do you know how much money was lost on November 20th? November 20th, when the market flushed down, the week after that. So let's go to that candle. The number, I want to say it was like $80 billion was lost in hedge flows. So if you go to SPX and you have this single day candle, this single day candle enticed so many sellers to push the market bearish. They got absolutely smoked a week later. So everyone that was buying puts, that was paying an arm and a leg for that, 28, 29 VIX, it was like 80 to $100 billion lost within a week of just trying to cover, So that's a couple things. Being bearish in the market doesn't really pay in the long run. Okay. It pays in the short run. And if you get lucky on, a big short type scenario, yeah, it can pay you really well. But I am not trying to make a career out of being right once. I'm trying to make a career out of making consistent income week after week, month after month, year after year. And history will tell us that the best time to do that is just to stay bullish. And so if anything my dashboard can help us do is stay out when the market's inconclusive or indecisive, that's going to help us a lot. And then get in when it's appropriate and ride the waves, ride the momentum, ride the drift, ride the melt up. Okay. All right. So anyway, we'll come back to that. Does that make sense? So I'll showcase some more. I'm going to do a couple more years here in the back test, try to get this up. And again, I'm going to do two things. Once I get this done, this is going to be, bear call spreads and bearish trades and bullish trades. I'm also going to have a filter to say, look, if we just turned off trying to be bearish in the market, here's our probabilities. Because like I said, the profit factor goes up, our win percentage jumps up quite a bit, and proof is in the pudding. So it's okay. Like, it's okay if you want to trade bearish. It's okay if you're like, I want some action, I want to trade, but at least it's good reward to risk, right? But what we never know is if the market's going to flush down, 1 to 3% or 10 to 20%, or heaven forbid, 30, 40, 50%. There will be a time and a place in the market, I'm sure, is going to roll over and be pretty ugly. But if it tells us to stay out, we're not getting hurt every week, right? So anyway, futures has come back a little bit. We're down 0.22. I'm going to close out my team trade this morning. That was the first thing I wanted to approach here. It's up 840. Let me close this bad boy down. Close position 153.50. See if I can close that down. Filled at one. Okay. What that close for? 145 to 153. That was $850. I'll take that little bonus. Actually, no, break even was 147. Sorry. So 650. So trade number 96 filled. We're going to take that net profit filled. Closed at 153.50. Net profit $650. Okay, so that's going to be an interesting one in the tracker because it was assigned, which was not the plan, but like I said, happy little accident. Happy to take that winner. All right, let's go SPX. Let's get some live gamma. Let's get rock and rolling. Okay, we'll take a look at the VIX this morning. Yes, I've got a VIX at 17.2. I do want to make, I want to make a conscious effort. Like this VIX may still be on the rise this morning. So let's be careful on those defense trades. Okay, 17.2. I'm just going to go right into the candles and see what my VIX high is. 17.28, 17.28. I'm going to take that exact number right now. 17.28 divided by 16. We're looking at 1.08. Okay, so we gapped lower. Looks like we're kind of quickly filling the gap. This might be like another big nothing burger day. Let's keep an eye on everything. Let me open up my real-time gamma. Okay, so here's what we're looking at. Positive, negative gamma pivot at 68.10. 6,800, pretty good support level, right around that 50% ATR. And 68.50, again, we saw that level yesterday, potential resistance. Okay. So let's keep an eye on this. The bears came in screaming this morning with that aggressive sell-off in futures. I want to see what numbers we can get as the VIX is going up a little bit. Let's go to the third. Have a look at our strikes here. So I can go 70, 75. That's a 9 delta. What's our plus minus on the day? 34 points. We're trading around 24 right now, so that's about 45 points higher. Okay. I'm going to try, I don't know. I don't want to go that low. Unless 9 delta is fine. Let's see what a 9 delta can get me for $1. I'll give us a little bit of breathing room here. I'll put this pending order in for us on daily profit play. It's trading for 80 cents right now. I'm going to try to get $1 if we get some direction this morning. Today is the 3rd. All right, trades in Telegram as a pending order. I'm showing about 80 to 85 cents mid price right now. We'll see if we get a little bit more direction. Okay. And just taking a look back at the last few days, here is a 15-minute time frame. There's some pretty good range trading right now. There's a low, there's a high. Are we going to spend a third day in the same range? If we break to the downside, there's a gap fill around 67.70. Okay. And if that is the case, I've got a put side today for daily profit play at 67.40. So we'd have to have a pretty, big move to the downside. Not saying that it can't happen, but just that's where we're at. VIX wise on the highs, VIX at 16. That's a pretty big retreat on VIX already. 17.28. That's a 1.08. Let's take this close and go 1.08. Puts me around 6,900. Okay, I'll go 69. I'm going to put a defense trade in at the top. VIX is going to be based on the high here on 1728. So that is a 1.08% move. So 6901, if I pin that bad boy, 69, I can go 6905. So two levels. I can either do this with a broken wing and try to pin it right at 69 and be like on the number, or I give myself like one more strike of breathing room. Okay. And I'd rather do that. Although it's more difficult for the market to get to the upside, but it can. We've seen that before where you measure these for a reason. You use that daily profit indicator for a reason and use that VIX box for a reason. Okay. So let me see if this will, be there if we need it. We still haven't been filled yet. Price is now trading at 75 cents. I'm just going to let it hang out. My call side's at 10 delta. Put side is trading at 7 delta. I could go up a little bit on the put delta. But like I said, I could see price going up to 68.50 or down to 6,800. That's enough direction, in my opinion, that our trade for daily profit could still get filled. If this happens in the next maybe 30 to 60 minutes, we could still get filled for $1 and still hold that trade. Okay, so I'm going to go 69, 69.05, 15. Set this up like a butterfly spread. Put this in for $1. And then sprinkle in a 10 by 30. Same thing here. That would be a broken wing. This one, if it gets filled for $1, I've got a 10 wide profit trap. So I'm not overlapping here. This would be for $1 credit. Again, these sometimes are difficult to fill, but if we have aggressive price action, they can get filled and be very profitable. So let's see if this will fill as well. All right, keep an eye on those. And then as long as my VIX, I'm gonna move this alert down below the VIX. So we had a 17.28 high, 17.3 alarm, and then I'll set another one here at 18. I just want to see if the VIX is going to be on the rally today. If it is, I need to make those adjustments. Okay. So biggest gamma level is still 68.50. Gap fill, futures market is flat. It's is down 0.2, 0.3%. Now it's back to 0.07. So really interesting kind of sell off at the beginning of the market. You can see the range, like I mentioned on the other chart. So you've got decent support and resistance. And if a break can go higher, break can go lower, you could simply measure the move and probably have that be kind of your bottom for the day or the top for the day if we break out. But if we stay in the middle, it's just a big nothing burger day. Okay. All right. So I'm looking at a potential like 69.01. And that's a VIX at 17.28. And then I'll take the gap lower 1.08 around 67.41. VIX at 17.28. So if the VIX goes higher than 17.28, I need to make adjustments on this top and bottom. So I'm just going to put in a fence trade to the upside today, right now, not to the downside, not yet. Because if I put it to the downside and the VIX breaks my 17.28 high, I'm going to have to adjust this down by a couple of strikes. So let's say that we go up to 18 VIX. If we go to 18 VIX, now looking at like a 1.12% move instead of a 1.08. It might be a strike different. So starting here, let's say we go to 1.12. Now we're talking 67.38. So I'd want to put like a trap there around like the 67.35 or so. But not yet. So I'm just going to do the upside right now. I'll do the upside. So 69.01 is my top. I'm looking at a defense trade at 69.05. Okay. So I will put in, these are both on the call sides. If you're interested, I'll post this in for a daily profit play. These are my top. Defense. Trade at the top based on 17.28 VIX. Okay. Image is in. Okay. Good stuff. All right. So now we hang out. I might as well get a chart alarm set here as well. If we're starting to break this support, I want to know it. That's 68.02. If we're starting to break resistance at 68.50, I want to know that. Okay. So we'll see where price takes us for the day. It could be just a big nothing burger. I thought with a couple of those nothing burger days that maybe Wednesday gets a bit more directional. And it still could. And that's fine. But our levels today that we're watching still haven't been filled yet. Trading for about 80 cents on the daily profit play. I want $1, so I'm gonna let that marinate for the day, for the morning. Right now, that call side's an 11 delta. Okay, put side has been reduced back down to about a 6 or 7 delta. If I still like this delta here, 11 delta, 70 by 75, that's not bad. If I wanted to increase the put delta just by a tiny bit, I could go 55 by 50. That's still not offering $1 though, so it doesn't really make me want to chase this too aggressively. So I'll just keep the trade as is. It might fill if we get more direction. If we end up coming up to like 68.40, 68.50, this might fill. And that's fine. Because hopefully we're clear of that with the 70 and 75 levels. Okay. All right. Give me 1 second. All right. How are we doing today? Eric is in the Telegram. If you're a daily profit member, it's in Telegram for defense trades. What I'm doing is I'm putting a broken wing at the 69.05 pin price. So I'm buying the 6900, selling the 2 contracts at the 69.05, and then skipping a strike to the 69.15. So in order for that trade to get filled this morning, we're going to have to see some direction. If we go up, that trade gets filled for $1, but it's $1 to risk 4, but it's based on a VIX that hopefully will not be exceeded, right? We're at a 16.81 VIX right now. So we shouldn't really, I mean, if price is going to go up, the VIX should be retreating, right? But sometimes the market makes like that VIX high of the day, and that becomes like the exact percent move that the market was able to go up for the day or down for the day. All right. So 69, we had a 68.70. So I'll use this workspace here. So I'm looking at a 68.70 for my call side. This is for daily profit play. And then a 67.40 there. And we're in the middle. So hopefully we get filled. I mean, I'm doing a fairly low delta. I'm asking the market to give me $1. If it's a big nothing burger day, like I might not get anything filled today. It's trading for like 80 cents. I'm just going to give the market a little bit of breathing room for some direction and try to take that fill at $1. Okay. All right. Let's check a couple of things while we're here. Pinch point scanner class today, 2 p.m. Eastern time. So pinch point today, trade session 1 of 2. We're going to do a class today at 2 p.m. Eastern time. and tomorrow at 2 p.m. Eastern time. We should have over 20 trades to review. We'll probably sprinkle in a couple others. If you want to look at some favorites or top watch list items, let me know. I'm happy to field those questions during these sessions. It is a pretty intense trading session, so come in ready to push some buttons. If you want to take the trades with me, I'm gonna post these for my pinch point scanner alert service, and we're gonna go through probably 20 plus trades. Okay, so between today and tomorrow, we should be able to get through the entire go filter that I have for my pinch point scanner and sprinkle in some favorites and the get sets. All right. So we'll probably review close to like 30, 40 trades. I would imagine, 3, 4, 5 are going to be live. Maybe, 5 to 10 are going to be pending. And those are all good. Okay. All right. While we're at it, let's do some top down here. We're not quite to all-time highs, but we are close. News today didn't really rattle the markets too badly. Futures, quickly down. One thing I would watch for, here's just a note on futures. Okay. So for whatever reason, futures decided to have a pretty nasty sell-off for about 0.5%. Now, if all this is doing is pulling back, this black line here is my session VWAP, right? If you're watching price action on the day, if we are going to stay below this session VWAP, which right now is around 68.40, that this could be a break, a pullback to that session VWAP. If this trend line breaks and heads lower, this could also drag us lower for the day. Just throwing it out there. Okay. Now we didn't really see this a lot with the S&P price action because the gap lower was created by that futures flush to the downside. Okay. But what I put on this is a futures workspace that I put together, and these are Heikin-Ashi candles, so it stays a little bit easier to read as far as trends. So when I do trade futures, I just tend to follow colors, right? If we're above the VWAP and it's green, stay green. If it's below the VWAP and it's red, stay red. So if I was going to be a futures seller today, I'd be looking at red on my Heikin-Ashis and see if we can stay red to some fresh lows and take some points. So, I mean, it doesn't have to be crazy complicated. If we're below the VWAP, you're looking to be bearish. If we're above the VWAP, you're looking to be bullish. And you'll probably learn the same thing that I'm doing with Income Grid, which is, yes, you can get some single day sell-offs here and there, but it's probably just better to let the market get above the VWAP, stay bullish, and just focus on being bullish. Right? So anyway, I'm going to keep an eye on that today. See if futures breaks a fresh low at 68.17. It wouldn't surprise me based on the structure that we saw this morning. And if that is the case, then that means that my intraday price action on SPX could head down towards our 6,800 gamma. Okay. If we head down to 6,800 gamma, we need to bounce there in order to hold the structure, because this yellow box right here, the shaded zone, is my positive, negative. Hang on. Hang on one sec. Come here. Come on. Let it out. Hold it out. Hey, sweet sassy.
Y'all right there, Chris?
Thank you, Benj. Well, we don't do that in, huh? All right. Well, that's a fun look into my typical morning, is clean and puke up after my dog.
That's okay. I was wondering. I popped on. I was like, man, there's
Dude.
something going on over here.
Yeah. No, my French bulldog, man. It's I mean, he's getting older, but I don't know what to do other than just keep cleaning up after him. Like he doesn't matter what food I put him on, he throws up like every day.
Yep,
So
I understand.
cool. Fun dog. He'll be my first and last Frenchie, that's for sure.
There you
I
go.
love this dog, but my gosh, man, it is like I've never had a dog be just not a dog. It's like it is like a child. If
Yeah.
anybody has Frenchies, like I mean, people love him. I love. He's been a great dog, but man, it is just so much maintenance, and they're not healthy ever. Like even though he has the best food and he's coddled and pampered, it's like you cannot keep this dog from like throwing up all the time. You can't keep this dog from like choking on his own food, and it's just
Uh,
the worst.
it's the worst.
So small, yeah. I mean, he literally gets like freeze dried protein pellets that I like wet down, so it's like just enough for him to chew it because I know chewing is important for dogs as far as digestion. He just like he has like the smallest trachea. They all have like the soft palate stuff. His nares. I mean, I've thought about the surgeries. But there's no guarantee. Like literally every vet's like, we can do it, but there's no guarantee this prevents any of this.
Right.
So I would hate to number one put him under like anesthesia because he already has like enough problems as it is that it does concern me like putting a French bulldog under the knife.
Oh
So
yeah.
anyway, we have to talk about it, but yeah. So I'm even though I have like noise canceling headphones, I can still hear it because that's how sensitive I've been for 7 years with this dog. Where it's like you never know,
You hear the
but
noise and
at
it's
least
like
he was kind enough to do it on the hardwood floors versus on the carpet.
that is, yeah, that's a bonus.
Yep. I have French and English, no issues. Well, that's good, Brett. You got a couple of good ones, I guess.
That's right.
Does the time decay eat into our dollar fill? Not necessarily. I mean, it will if we're not going anywhere in the next probably 60 minutes directionally. You look at the screen right here. If we're not going down to 6,800 and we're not going up to 6,850 in the next probably 60 minutes or so, then yeah, we may not get a fill today, and that's okay. If you think about it, like 67.40 is way down here, and 68.70 is way up here, right? So we definitely need to see some direction. And look, if I don't get it, it's okay. Like I'm not going to sacrifice my plan to get closer to the money just to grab a dollar when what it might do is put me at risk for any type of direction. Look, this market has been sideways for 3 straight days. It could also stay sideways today, but if we start breaking to the downside, I want to give myself enough wiggle room to still have like what started out to be a you know 10 delta day, and it was a plus minus like 36 points. So plus minus 36. If we break to the downside, I mean, we opened up around 20 or so. I mean, could we go to 67.90? Could we go to 67.80? Sure, but I want to stay out of the way. That makes sense. So if we get filled, like we've done this for 14 months. Um, I'm not worried about a trade that if it doesn't fill today, okay, fine. I'd rather be, hoping we get filled at a dollar with a high probability win than all of a sudden changing my plan, going way closer to the money, and then have the market makers, that have done their job the last 3-4 days, like very limited price action directionally, and then have a day like today where it's like, yeah, maybe it moves. Maybe we have a breakout for the first time in 3-4 days of trading. But if we don't, it's just going to be an indecision day again. And I could see that. I mean, we could stay above this gamma, we could stay below this gamma, and it's a nothing day, and that's okay. Since VIX is down from 17.22, should we recalculate? No. No, never. I wouldn't recalculate it because I'm not going to call the top or bottom based on a lower VIX, right? I would rather take the highest VIX for the day because that's likely going to be my extreme move of the day. So the highest VIX this morning was that 17.2. And if we have a push to the downside, look, this VIX could still be breaking. We could still break the VIX and you got to recalculate. If price stays here or goes back down, this matters. That 17.22 will matter, or that 17.28, whatever that value was. High of 17.28. That 17.28 matters. That can matter to the downside. Look, if you're trying to call the top or bottom, you do not want to undercalculate your VIX. Okay, so consider this as like if the VIX has made a high for the day, that's going to be my best defense to the downside, my best defense to the upside if we need it. But if VIX goes higher, all bets are off. We could still go higher, we could still go lower. That's why this is a pretty dynamic way to pay attention to your intraday trading on your highs and lows. Good question though. Okay, good stuff. Let's see here. We opened up around 20 or so. I mean, if we're going to have like a big nothing burger day, other ways you can trade that. And it's going to be a bit more risk, but if you think there is an opportunity for, an indecision window, um, 20 by, let's say 50 and 25 by 95, you'd risk about $700 on the day. Potentially can make up to $1,700, almost $1,800 if price stays here for the day. The goal in this is if price is sideways, this is an iron fly trade. If price stays sideways, this credit trades for a lesser debit. So if we don't get a lot of direction here, yes, you are taking on risk, but your risk is, I mean, you're looking at like a 2.5 to 1 on the day. And even if you can take this 720 risk, this 22, let's say 2280 credit, trade it down to 2180, make $100 on the day. What does price have to do? Just stay sideways. If price stays sideways, you can grab a quick dollar out of this in probably 60 to 90 minutes, maybe more. Like if you're ever wondering, like there's ways to trade these markets up, down, sideways. You get a feel for this. I mean, and the thing is, like, I don't know if price is going to stay sideways. Do we have a move? We have news at 10 o'clock, by the way. So we might see some direction here in the next couple of minutes. And if we do, our trade could still get filled on daily profit play. If it's a big nothing burger, then something like this, just mark this 2280, just an example trade today, 2280. And we're sitting here for the next, hour. What does 2280 look like in an hour? It might be trading at 2180 or 2150 or whatever. So there's ways to make money. Let's see here. Practical options course. Yep. Blake, who'd that question come from? Is that from Bill? Yeah, I got your message, Bill. You should have access to that, man. If it's not a standalone course, let me double check. I'll put Dion on it today. I'll make sure that you get the links for it. Okay, because I can't I can't give like a Vimeo code to just play that. I'd have to give you like my username password, which I'm not going to do. So I'll just make sure, like, I know that our one-click trading, we have the videos, we have the assets, we have the strategy guide. So I'm just going to make sure like you're given the access token for those videos. Okay, so I'll make sure. Let's see, I've got your email here, Bill. Give me 1 second. Okay. Yep. Just sent that email to Deanna. We'll make sure you get your practical options there. So what Bill's talking about is, I've said this before, my practical options full course. So this is a course that I built for. All right, I'll do that in a sec. This is a course that I built for initially for my nephews, and then I've ended up directing, 80 plus year old clients to this. Anybody that's asked me, neighbors that have asked me, knowing that I manage money and stuff like that. So they've asked me like, what do you trade? And so as I mentioned options, they're like eyes gloss over. So I stopped the conversation there and just say, if you ever want to know, just let me know. I've got some education if it might help get the ball rolling. So anyway, a lot of people have purchased this over the years. And it's 13 of my favorite strategies. It's 11 videos, a PDF. I walk you through everything. The reason I built this is if I were to teach somebody from scratch, like literally knowing nothing about options, I know there's a lot of textbooks. I know there's a lot of like the learning curve for options can be pretty high, and I don't want it to be like that. I don't want it to be this intimidating, um, journey of like vocabulary and price and time and all the Greeks and implied volatility. Like all these things mathematically matter, but what you have to decide as a trader is, do I want to be bullish or bearish or directionally neutral? And what's the timeline that I'm looking to give this trade? That's it. If you know what you want to trade up, down, sideways, if you know how much time you're willing to go, you can place a trade with options. And then it's just understanding what type of strategy do I want to deploy. Okay. Um, I still stand by. I'm pretty firm on. I think a lot of traders get into options because it's essentially like it's like trading leverage on things you don't generally get leverage for, right? So like buying a call option is one contract controls 100 shares. Well, you can make a lot of money when you're right. But unfortunately, I do believe in market efficiencies, especially when it comes to index option trading. Individual stocks can be very different. You can get paid extremely well on individual stock options because they're much more volatile to the upside and downside, right? If you take your favorite stock, right, it has likely moved a lot more to the upside and or the downside versus the S&P or the Nasdaq. Yes or no? This year, our peak to trough was 20% high to low in the S&P, 23 to 25% Nasdaq. 40+% rally from the April lows to the November highs or the October highs. But individual stocks were down 40 to 60 to 70% and then have ripped 100 to 200%. So there's clearly more volatility in individual stocks. But if you're trying to exploit that time and time again, you also will end up paying excess premium for things that are already moving, expensive options, and end up losing on those long trades. I prefer to be a base hitter. My success in options has been literally from base hits where it's like, just give me a single, give me a single, give me a single, give me a single. You can get in the Hall of Fame from hitting singles, 70% of the time, 80% of the time, 90% of the time. A little discretion. You want to trade the market up, down, sideways. There's ways to trade it, right? All right. Yeah, so I'll get the link here. Let me see. I'm gonna pull this over. I don't know what they're asking me to do. Payment method. It's like I already renewed my Vimeo. Give me a sec. Right. Vimeo gets to charge me an arm and a leg every single year, but it pays for itself. Okay, I'll show the link in a second. All right. So that should be updated. And let's go. All right, here's the link. So I have a $27 course right here, and that's the quick options. That's a little tester. If you're even thinking about trading options, that's a great way to just wet your whistle, get some basic knowledge, long calls, bullish spreads, long puts, bearish spreads. If you like that idea, you want to go a little bit more advanced and trade up, down, sideways, full course. Now, you can get the full course if you upgrade to Daily Profit Play Lifetime, Waterfall Income Lifetime, Newsbreakers Lifetime, Double Ups Lifetime, Pinch Point Lifetime. Okay, Project Options Edge. If you're in Project Options Edge, that's a bit more of an expensive course. I'll give you my full course. So if you upgrade to any of these courses here, okay, Crash Insurance is only $97, so that one doesn't count. But Pinch Point, Double Up, Newsbreakers, Waterfall Income, Daily Profit Play, if you upgrade to a lifetime membership, I will give you the full course. That's a $500 bonus, right? And are you going to apply all of those strategies and all these services? No, but you know how to trade the market up, down, sideways with something that is very applicable. You're just trading price and time. If you have a narrative or a theory, I think this instrument can go higher. Well, you've got go-to strategies to help you make money if price goes up. I think price is going to be sideways. You have go-to strategies to see if you can get paid while the market goes sideways. I think this thing's going to go down. You have a handful of strategies to help you trade the market if it goes down. So you are equipped with the tools and resources and the strategies to trade these markets as you see them, right? That's what options is for. It's taking a layer on the underlying asset and allowing yourself to express whether or not you want to be bullish or bearish or neutral and make money doing it. Make sense? So if you upgrade to any of this, and that's what Bill did, is he upgraded to a lifetime membership. So when you do that, let me know. And you can also let our customer service team know. So support at prosperitypub.com. If you let them know that you've upgraded to lifetime, or you can call them and upgrade to lifetime, you can email them, upgrade to lifetime, then we will get you access to the full course. Okay. So just throwing it out there. Like, I've had this course now for a couple of years. This was built back in, I guess I built it. This felt like a lot longer ago, but it says October 24, but I think I had it. I had like raw videos, probably a year before that. And then I put it on demand to make it a sellable course, in October 2024. But I did it with the idea of, if nobody knows how to trade options, let's make it easier to learn. I've traded options for a lot of years. It has helped me be the risk manager that I am. It's helped me be the trader that I am. It's helped my risk adjusted returns be as good as they've ever been. I have accounts this year that are up nearly 40% that have taken less than a 6 to 7% drawdown for the year. If it wasn't because of if it wasn't for options, I couldn't do that. Okay. So options are like, they're an incredible tool that we just understand, like, what are we trying to express in the market? And then we can take some trades. I'm a base hit guy. Okay. And some people maybe don't appreciate that. Some people don't like that because you want the big home runs, you want the YOLOs, you want the big fancy, 3, 4, 500% gains. I get it. I want that too. But I also know that options is entirely about probabilities, and those trades are not highly probable. They're not. Do you think the market's going to reward you constantly with, 500 to 1,000% gains? No, it won't. And if you get them, it's awesome. Congratulations. But it's not the norm. So I like to trade relying on probabilities. I like to trade relying, like, if I place this trade, I have a good probability of making money. That to me is better than, hoping that I can make some money. So anyway, that's my PSA for the day. Okay. If you want to buy the full course, if you don't have any of my services here, that's no big deal. If you don't have any services, no big deal. If you want to buy the full course, you can grab the link. Yep. So there's the full course. So $497, and that gets you full access. If you do get the course, send me an email, because I will, if you send me the receipt or give me an image with the receipt of your purchase, then I will send you also a PDF, like a strategy guide. So I have like a 70-page strategy guide for the full course. So that is chrispulverpub@gmail.com. That's the easiest one for me to check for anybody that's a member, anybody that's a follower. For my trading services, chrispulverpub@gmail.com. Cool. All right. All right, Blake. Where are we at for the day? That little iron fly is trading about 30 to 40 cents lower. We're still not filled on daily profit play. It's trading now for 55 cents. This might be a no trade day for daily profit play unless we have a lot of direction. I'm not going to chase. I'm not going to scramble. This might be another day where it's just a big fat nothing burger. Look, that's okay. But I will warn this. The market's not going to stay in this box forever. Okay. So if it does it for today, that's all right. It would be a little bit easier for us to read, a breakout in price. If it comes to intraday, we got to be mindful that this breakout could measure symmetry. So I'll do that analysis as it happens. If we have a gap up or gap down, we'll kind of ballpark this and then take in our expected moves. But price is doing something very similar to what it did yesterday, which is we have that 68.50, 68.20, 68.10, 68.00. Like it just seems to be stuck within those levels for right now. What could be the catalyst to break this loose? I don't know. I mean, we just had the 10 o'clock news. We have
Yeah.
a core PC on Friday. We don't really have much on the calendar. It's all about the Fed, to be honest. It's all about the Fed next week. And if there's a lot of indecision, I mean, just take a look at this. I would say like this type of price action, I really thought would happen during the post Nvidia sell off day. I thought we'd have like several days of indecision because that's what happened on October 10th. We had 9 indecision days before we finally broke higher. We had literally the bottom, and then in 3 days this thing broke the high. Like that was such an aggressive rally that now we're going indecisive just above those highs. So could we get to highs? Sure. Could we fall back into this Nvidia candle? Sure. Structurally, this is where the bears need to keep, or I should say the bulls need to defend this area. The bulls need to keep price above here. And the bulls obviously can try to push this market up to all-time highs. But the bears have some room to just pull prices back a little bit. But the bulls are going to try to hopefully defend, the 65.50 zone. If we hit all-time highs, that's great. We should have a bunch of profit rolling in for waterfall income. And believe it or not, like this year is wrapping up very quickly. We have next week Fed. The week after that is our last final week of trading, and then it's literally Christmas. It's Christmas Eve,
Yeah.
Christmas Day, New Year's Eve, New Year's Day are in the middle of the week. And so we're going to have 2 very quiet holiday trading weeks that maybe there's some surprises, but hopefully not. I mean, honestly, you don't want to have volatility and crazy surprises during holidays.
Nope.
And I say that because nobody wants to be sitting here watching the markets when brokers close at noon or 1 o'clock. And, I mean, we saw it on Friday last week. The freaking futures market had an outage and the prices are crazy. Like the bid ask prices are terrible. You can't even get the trade that you want. You don't want that type of surprise with a low volume environment. There's not a lot you can do, right? You want the market to just, if it's going to be put in motion, stay in motion. So if we can get a thrust to the upside, let's see if the market can get a rally. Do I expect a bit of a correction coming into like 2026? Sure. Sure. Come back and fight the 200-day moving average. That's going to be a 10+% correction. Be prepared for it. And then we'll position for, dips from there. By that time we'll roll out, income grid. We'll have a macro dashboard and we can stay on the right side of risk, would also do it with a responsible trade size and risk management. So we're never risking more than what we can make. Okay. All right. Let's see here. Larry, you got some iron flies going. Yeah, it's a good strategy for the day. If you want to set it up for the day, iron flies could be really solid. Butterflies could be solid. Here's what you would look at. If you throw a trap out there for current price, you throw a trap out here towards the 68.50. You throw a trap down to maybe the 6800 area. I think, maybe 2 to 3 flies on the day could still set you up for some success. Again, it's not a guarantee, but if I were to pin maybe like a 67.90 and then pin like the 68, let's say the 68.50 to 68.60, and then the middle prices, I mean, you're taking on the most risk. This is going to be the most risk in the middle because it's at the money. So you're probably taking on the most risk here, and then you can have less risk on the downside because it's out of the money and less risk on the upside because it's out of the money. And that way, if price goes down here, it offers more bang for your buck, but you got to cover the risk on this one and this one. That's the good and the bad, is you're essentially going to have to be risking, X amount and have one trade hopefully land you inside that profit zone for the day to get you enough to pay for these trades. But iron flies are a pretty great way to do that. Yep. Give me 1 minute, Blake. Yesterday made 550. Awesome. That's a net. That's awesome. How many trades did you take yesterday, Larry? How many flies do you have running? Okay. Programs we recommended for newbie and trading. The 3 above. Oh, I see. Okay. Gotcha. Okay. So made 350, made 300, lost 100. Yeah, that's great, man. Cool. That question from Aleko asking about, which programs. I mean, honestly, because a lot of my services are option focused. If you look, I am trying to lead as many traders into, profitable trading, educating you on how to trade these markets up, down, sideways. any place is a good place to start. I will say that I literally built these practical options for a foundation. If you take the practical options course and it makes sense. I mean, I built this for like a 16-year-old and an 18-year-old kid that do not know anything about trading. And now one's in college, trading options. One's 18, a senior in high school. He's already opened up a Roth IRA. He's got a junior account. They're trading options. They get it, right? So I mean, I tried to make it that simple. I've also given this to some of my clients that are in their 80s because they want to have a couple of play accounts to trade $25,000 or $50,000 while I'm managing bigger capital for them. But it's just to help them prepare for little income trades. There's ways to make money. There's ways to keep it pretty simple. So if this makes sense, then you're going to become very familiar with like anything that I'm doing here, because all I'm really doing is a combination of some of these options. So what I don't do is I don't just buy calls and I don't just buy puts. I don't do that because it's too hard to consistently cover the premium that the broker is charging. Okay. So I like to keep the line in the sand as tight as possible. I like to keep the risk is defined and managed as possible. And I would rather take 1,000 trades and win 80% of them, 90% of them, than having one big trade that maybe wins 500%. But if I do that every single time, that is not the probability. That is not the house edge. Okay. All right. Is that available to Diamond members? Yeah. Yep. So if you're an all access Diamond Club member, you should have practical options. If you're Project Options Edge member, you should have practical options. If you're a lifetime of any of these here, lifetime pinch point, lifetime double ups, lifetime newsbreakers, lifetime waterfall, lifetime daily profit play, you have the full course. Okay. So if you are just a 1 year member and you want to upgrade to lifetime, I'll make sure you get practical options. If you want to just get practical options as is, that's fine. The link's in the chat. So I'll throw that chat out the link in there again if you want it. Okay. And then today, pinch point, I'm doing a trading session at 2 p.m. Eastern time. 2 p.m. today, pinch point. Let me bring up the quick pinch point, and then Blake, let's go ahead and run that session. Let's go one-click trading. So this is literally what you'll do if you get your pinch point scanner. Is you come into your one-click trading member portal, get yourself logged in. I'm doing that right now, and I'm going to go right to my pinch point scanner. So I get logged in. Inside your membership area, I'm just going to go to show all. This is all the classes that I have, and I'm just going to type in pinch, and there's my pinch point scanner. First nice. Thumbnail, access the scanner. We had 22 yesterday in the go zone. Today we have 21. So one dropped off. SLB has been up there all week. Mondelez we looked at yesterday. AES energy. We got some energy plays. SLB is an energy play. So we'll look at some of the volume today. This is a good way to filter this. So, there's 21 stocks. We'll price them out. Not all these trades are going to be filled. And in fact, if I walk away with like 3 to 5 open positions or pending positions, that's pretty good. But what this helps me do is, 9,000 different stocks out there between US and non-US. And then I want to see a technical combination that gets me a trade that's likely going to give us some direction in the next 60 days. So it's a swing trade. And I think over the next 60 days, that gets us through the holidays, that gets us through, maybe the first part of January, order flow start to come in. Realistically, today, I'll probably look at like February, March, or April expirations. I want to give ourselves plenty of time, plenty of flows, plenty of catalysts, plenty of earnings. Like, let's give ourselves a decent enough window where if the markets go sideways through the holidays, we're not going to be hurt by, needing some direction, because these will likely, coil and pinch and continue to do so. And then when they're ready to flow, they will. So these are all based on, volatility pinches and consolidations that we can trade for big trends. Okay.
Nice.
Yep. 2 p.m. masterclass. Okay. Blake, let's fire that up. And everyone today in pinch point, I'll see you at 2 p.m. today. Daily profit play. Keep an eye on the Telegram. If something fills, I'll post it. I'll update it. Right now, it looks like we are still kind of facing a nothing burger day, which is okay, but I'm not going to all of a sudden change my plan at 10:20 and say, let's take a 15 delta daily profit play. It's like, no thanks. I should have already done it this morning. If you took a 15 delta, you're probably already out of profit. If I've got some daily profit members, let me know, but that's probably the case. That iron fly I talked about is now up about $80. So It does work, right? It's like there's ways to make money. Anyway, all right, fired up, and 2 p.m. today. I'll see you for pinch point. Thanks.
Boot you off there. There we go.
With real time and zero lag momentum. And you'll also have the time horizon. So typically I'm looking out about 4 to 6 weeks on a lot of these trades. When I trade for my service, my pinch point scanner alert service for my lifetime pinch point members, typically I'm going out about 60 to 90 days on my trades. Okay. All right. We know this. There's losses that happen in trading. Even though pinch point's been a fantastic service, we have still taken 7 losses. We have 41 winners, 7 losses since the service started. This would have been in, I think, May of this year. So, we have 87 trades that we have in the tracker. And we've had just under 50 of them fill. So I've got a lot of pending orders. Some haven't filled. Some have already expired with those durations we put on. So those won't be taken, obviously. But I use the scanner. Those are likely going to find us direction. Let price come to us, get the fills that we want. I'm looking for asymmetry where I always want to be able to have a trade that offers us, a 1-to-1 or better. And then it's easier to hit your 30, 40, 50+% take profits. Our biggest trade, I think our biggest winner was let me see if I can find my win column. So I've got lots of 50% winners, like 50% return on risk, 50% return on risk over and over and over. 63% was a pretty big winner. That was because we had a gap higher, which does happen. That was a UPS winner. 48.5, 35 and 50, 40, 46, 47, 83%. That was on Nike. That was an 83% winner. Not bad. So like I said, my point is when I'm doing these trades, I mean, if I want to maintain a high win rate, I'm going to go after my sweet spot is 40%. 40% return on risk, 40% return on risk, make it like clockwork, take the trade, take profit automatically. 40 to 50% is what I'm going after. We're winning 80+% of our trades. It's not that hard to do. Okay. Because we take the trades initially with a setup that gives us like a 1-to-1 opportunity. So if I'm risking $250 to make $250, it's easier if you don't want to hold the trade all the way to duration. You don't want to hold it all the way to expiration. Just go after a 50% take profit. 40% is a little bit more conservative, but higher win rate. And my favorite thing about pinch point is having the trades automatically close. A lot of times I've, doing sessions like this, doing sessions late in the day, 3, 4, 5 live sessions a day, having to trade, I'm like, I don't recognize that scan or that symbol. Oh, hang on. And I just check and it's pinch point. Sure enough, we hit a take profit and there's a, 40% winner automatically clocked. It's like one of my favorite things as far as managing a services and managing trades is we take the trade, we do all the research ahead of time, know the risk ahead of time, place the trade, set the take profit, and let the broker close us out. And that's what's been happening 85% of the time is brokers close out for the winner. Cool. All right. So today let's talk about a predictor breakthrough that could change the way that we're viewing the stock market forever. It's first of its kind, thanks to a top-tier mathematician team and experts with decades of trading experience, plus a game-changing way to decode a stock's volatility profile. We have really cracked the code for when prices are pinched and coiled and consolidated as the potential to move higher or lower. It doesn't really matter directionally, but we get these trades before they actually happen. So a lot of traders like to wait and confirm, okay, the breakout's here. When price breaks above, get in. When price breaks, I get it. I understand that. Okay. But there is something to be said about getting in before these moves happens because they are way, way more cost effective and the probability of direction is very high. So I do anticipate a lot of these trades, and this is a brand new way to front run some of those explosive moves in the entire stock market. Now, I know that sounds crazy, especially when you're getting in ahead of time or you look at a stock chart and you're like, price isn't doing anything. But that's thanks to the pinch point scanner. Best part is nothing you have to download today. Okay, so you got instant access to the pinch point scanner inside your one-click trading member portal. This is our easy to navigate website. Pinch point scanner looks just like that. Couple clicks of the button. You have 9,500 stocks that you can filter down to this week, real time, 25 positions. So you talk about, this scanner is helping you find needles in the haystack, ones that are likely going to give us some directional movement. It does that for you. That makes my life a lot easier. That makes my, trade finding a lot easier. That instead of the, very thorough labor intensive top down analysis, Pinchpoint gives me trades that are ready to move, prime to move. So once you jump in your Pinchpoint scanner, click on the Go filter, and these are stocks that are looking great for the next probably 40 to 60 days. On the high end, probably 90 days. But it's a swing trade, and they work a lot. Okay, so from there, you see the top stocks that are set and primed each and every day. All right, here's an example on NextAir Energy. Open up your Pinchpoint scanner. It's at the top of the food chain in your Go filter. And if you look at the actual stock, this is what I like to see. Okay. Most people would see a stock like this and say, don't touch it. It's got to break above $69 or break above $70. I look at this as I'm going to trade options, which all I need is price and time. Now, price isn't doing anything, which is good for my options chain because it's very, very cheap. Okay. Time is all I need to get this trade to work. So if I give this trade 50 days, 40 days, 60 days, okay, we don't need that much time. Most of the time, if a stock looks like this is coiled up, you're going to need maybe 2 to 3 weeks to get some initial direction. Okay, so we can place a trade here, and the Pinchpoint scanner inside of your logic, there's a stop loss area, profit target based on expected moves and current volatility. What you will see a lot of these trades do is what looks boring like this within weeks will become a very one-sided move. One-sided bullish, one-sided bearish. This is what I'm saying. The Pinchpoint scanner is helping us find stocks that are ready to make moves. Okay, and so the entire price action will change very rapidly, which is why I want to be in these trades ahead of time. So, and NextAir Energy was a nice winner for 121%. Here's Walgreens, another one that pops up in the Go filter. Very cold price action within about 20 to 30 cents consolidated. Expect a move going out 30 to 45 days, going out 45 to 60 days. Look at the behavior. Super choppy price action to then, $2 to $3 straight directional, 140%. So all we need to do is use a Pinchpoint scanner, find great trades. This is a software that's going to help us spot these parabolic moves before they happen. Okay. So because you're not going to find these type of opportunities with boring old fashioned indicators, you're not going to find these quick hitting high paying stocks and trades by glancing at fundamentals or executive reports. This isn't on, sweeps and whale forms and form fours and what Pelosi's doing and what this hedge fund is doing, 13F, stuff like that. Okay. These signals are going to happen way too late. This isn't this is, not using traditional methods at all. What I'm doing is I'm looking deep within a stock's volatility profile and essentially finding, the most coiled, the most pinched price action. So that way within a couple of days or within a couple of weeks, price has to go somewhere. There's plenty of reasons for price to move, right? If you give price enough time, you're going to have reasons for it to move. It could be the broader market. It could be individual news events for that particular stock. It could be mergers and acquisitions. It could be earnings season, right? It could be all sorts of stuff. But it's amazing like how the technicals set us up for these really nice moves, and we can take advantage of that. This is what I call a pinch point. And as you'll see, it unlocks an entirely new way to target explosive parabolic moves. And, we get in where the prices are cheap and we get out with really safe, high reliability take profits. So this is allow us to get in on the right side of what's going to be hopefully, double and triple digit gains. I price this out. So if we're going in a single direction, if you just want to be bullish, you can get, 100 to 200 plus percent gains. If you want to go both directions, I still like 50 to 100% gains. Go in both directions. Okay. And we get this before the stock takes off. Here's one on Moderna. Assets, lame, right? Trading for a couple dollar range between 95 and 97. And all of a sudden the price action changes to do what? Move very stubbornly to one side. You have a huge $20 move in the underlying and a triple digit winner on Moderna. Williams Companies, WMB, stock trading for maybe a $2 range, 83% move to the upside. Again, look at that direction. $6 out of nowhere. Doesn't seem like a lot, but that's over a 10% move in the underlying. Black & Decker, trading within a $2 range, then rips up $10 out of nowhere. This is what the pinch point scanner is designed to find. Okay, so these explosive trades gets excited and buckle up because I'll share the list. I said earlier this morning I've got 25 stocks on my live list right now. We'll take a look at them. and I'll plan on going through these trades in full. That's why I'm going to spread it out between Tuesday and Thursday, because every day this pinch point opportunity, there's 9,500 stocks that it's searching for. So we can look and see, we might have 25 today, but by the end of the week, we might be down to 15. We might be up to 30, but that gives us some trades to look at some action. Okay. All right. Let's see here. Clinton says, who can I call to walk through simulated trading with Thinkorswim? Clinton, if you want a demo account with Thinkorswim, you probably just need to work with Thinkorswim. If you just, their Thinkorswim platform allows you to do like a demo trading account or paper trading account. Schwab is who you'd want to contact if you want to open up a paper trading account using the Thinkorswim platform. Okay. All right. I'll show you the 25 trades later today. So these are free, no strings attached. I'll give you the screenshot if you want, but how I price them out, the trades we take for pinch point. If you want to be a member and jump into my live services on Tuesday, Thursday this week, those will be a couple of good trading sessions. Okay. So if you want to see some of this, type in go in the chat for me, and welcome to Pinch Point Scanner. So if you have not traded with me before, hopefully at this point showing up every single day in my daily profit lane, you know who I am. My name is Chris Pulver, former hedge fund manager, experienced option strategist, proud new dad. That kid right there is almost 1 year old now. He was like maybe 4 months in that picture. Now he's turning 21 days away. It's crazy. It's been a wild year. Or you might see me trading live every single day on YouTube, on TradingView, on social media, whatever. But more importantly is I show up and trade with members every single day. Real trades, real money. There's no paper trading here, and do it in real time. I have over 20 years experience in the market. I've certainly seen a lot of things. I trade everything: indexes, stocks, options, futures, forex, cryptos, you name it. Plus the powerhouse services that are doing really, really well. Let's see here. Waterfall income, over 94% winners. We are at 90%, like 89.4, 89.5% for daily profit play. My project options edge is at like 94% win rate. Double ups is just actually like model portfolio wise, double ups is making the most money because it's like the explosive high reward, low risk strategy. Pinch point is doing awesome. We're up $33,000 in the portfolio. 41 winners, 7 losses, 85% win rate. I would say all but maybe of the 41 winners, I'd say 37 of those have closed out automatically. Some of them have come with somebody mentioning, hey, Chris, check this out in a live afternoon session. Hey, that pinch point trade, and we're up, 37% profit. I'm like, I'll just take the profit. So I've closed out a couple manually, but for the most part, it's automatically taken profit. Okay. All right. So average win rate, 85%. All trades issued to members, all live trades, we're 85.4% winners. So live trading sessions and the incredible successful strategies. Some of my followers have done really, really well during, this year. It's been a pretty interesting year. Peaks and valleys. We've seen one of the wilder swings in the markets. We might have an interesting finish to the year as well. But here's some of the top stories. Larry's up $67,000. Randy's closed out over 100 winners, actually over 200 winners in one of my services. Here's Lynn, 4K to 20K. Here's David, made over $8,000. This is pretty awesome here from Greg. I'm 72 years old. I've been trading with Chris, or trading for 10 years. I've had more success with Chris since September. So this is just over a year ago than I've had the past 9 years. So, I've said this for a long time when I've been in the financial education space. My job is to help traders learn faster and trade better, right? Accelerate the learning curve. I put process ahead of everything else. I think, especially in option trading, we know the outcome. We know the potential risk. We know the potential reward. I've never seen traders be able to be more responsible with risk management than trading options. And unfortunately, people don't do that. People leverage and people are, really aggressive, and you make all this money in the upside, but they give it all back. And, my job is to make sure that we protect the downside. The upside is easy. The markets will give us plenty of times to be bullish, plenty of times to make money. It's when it's really ugly and it's really uncertain and it's really volatile. That's when people struggle. So anyway, take somebody that's been trading for 10 years and struggling, and in the last year had, plenty of success and kind of hit those tipping points and get those breakthrough moments. So as great as those stories are, it pales in comparison to what I'm going to show you today. This is one of the most important tools that I built. New predictor breakthrough that, as far as I know, I've not seen anybody replicate this. We have, initially we started this out with about 10,000 stocks. I did a filter here. We're down to about 9,500. But this is pre-calculated which of these stocks are likely going to be going higher or lower. And again, before it happens. So you just jump into your scanner, click on the go filter each morning. You can look at your favorite tickers as well. So if you have, you like to trade the SPY or the Qs or any of the ETFs, you like to trade your Mag 7s or Teslas, Nvidias, they're going to be a better trade if you let them get into some type of pinch point format. If I have a Tesla at a get set or a Tesla at a go or Russell, the IWM was just recently at a get set. Like, we saw these things happening. Okay. So point is, it's a better technical setup if it pops up in the, pinch point settings versus just randomly trading, an asset or ETF. So here's Robinhood on January 14th. Robinhood, big story for 2025. It's been a big story for the last 4 years, but at least it's now a more compelling story versus the fact that they were, I'd say, a nuisance to traders in 2021 with GameStop. So anyway, market opens. We're dealing with like a $2 to $4 range on Robinhood. Pinch point scanner gives you the stop loss and the take profit. Look at the directional change. Coil, consolidation. All of a sudden becomes a one-sided move. We go from a $3 or $4 range to a $12 move in the underlying within a couple of weeks. That's what pinch point does. It's finding those trades for us where price is likely going to move in the coming weeks, and we're already positioned for it. Okay, so walk through that step by step in just a moment. Everything we put into the code here. This is why I believe it's one of the more powerful trading systems out there. And I will say this: if you have struggled to find good trades, if you have struggled to find good direction, feeling like you're taking one step forward, one step backwards, one step forward, two steps backwards, I get it. Okay, really not your fault, but take some accountability of the results. Take accountability of risk management. I've been in the markets for well over 20,000 hours. I found that one of the big reasons that people fail is, especially in stocks. Think about the phrase, the acronym FOMO, fear of missing out. Everybody's chasing stocks that are already moving. Okay, which means you're usually too late to the move. The move's already happened. Smart money's already in. I'm talking about, we've already seen a bullish direction, and all of a sudden we get that last little bit, and you're like, oh man, this thing's going to explode and go to the moon, only to see it get the rug pulled next day. Or something terrible happens, like this was one this year on United Healthcare. United Healthcare is one of the most ridiculous insurance stocks that I've seen in a long time. They're usually pretty boring and pretty low beta. And after the CEO was unfortunately murdered this year, it's like the stock was down, I think 50 to 60%. I was buying it. And so, shorting a breakdown like this, it's like, oh, the stock's going, it does the opposite, right? So people tend to chase what's already moving, and you end up missing a lot of the big direction. You miss like the lion's share of the move, or you're totally wrong on the trade. So when stocks are already moving, it's easy to get caught up in the headlines and the hype, let the emotions take over, and really place a poor trade. So, and what's even worse is, as far as the options market goes, when the stock is moving, option premiums are expensive. Okay, I don't like to pay an unreasonable amount for options. Whether I'm going bullish or bearish, I don't want to overpay for that. Okay, so when you're paying a premium, you're getting way less bang for your buck when it's a high value, a high premium stock. So if the real opportunity is potentially in a chart that is looking completely dead, right? Boring, sideways, choppy consolidation that looks like this, that most traders don't like to touch. But if it's weeks and weeks and weeks of this, it's not going to do it forever. I can promise that. Like, the stock is not going to stay sideways forever. Okay. So it might sound backwards, but when we get really cost-effective, dirt cheap options, and then all of a sudden we see that stubborn one-sided move that's coming from the volatility profile, that's what pinch point does so well, is we find these really cheap option prices that are cost-effective. Price hasn't really had a time to explosively move one way or the other, and we're in already. So that by the time we're getting a direction move, we're already participating. The options premiums are swelling, and we can get profits. We automatically close out. Okay, so even a move of the underlying asset of 2 to 3% can deliver a really big return for us. So when the breakout finally hits, we really see these explosive, one-sided, parabolic type moves. Here's an example on AOS back in March. Maybe it's a company you've never traded before, but you're talking about an absolute dud, a couple dollar range here within $2 or so for weeks at a time. Okay, but on March 6th, none of that really mattered because it was flagged in the go filter for my pinch point scanner. We're still trading this thing inside of a $2 range. Okay, so rather than waiting to see, well, if I want to trade the stock, it's got to break above $68 to make this more actionable, give you some technical confirmation. I like to get in knowing that time is on my side. If I give this trade enough time to work, we should see this thing turn out to be a nice winner for us. So you have the suggested strike price, you have the expiration, you have the everything that you'd automatically need for a good trade inside your pinch point scanner. The tool does that for you. So you have your stop loss and take profit target. And what happens? Look at the volatility profile change. Look at the price action. Sideways, choppy, coiled price action to then one-sided directional movement. It doesn't look like a lot, but that's like a 15% upside, or like a 10 to 15% upside in the underlying, but it allows us a triple-digit return in just a couple of days. Okay, so the stock had about a 5% move to get it. It actually exceeded that, but we're also not overpaying for those options. Okay, so the underlying move of 5%, when we take the trade with pinch point, we can get triple digit winners out of that versus chasing an Nvidia or a Tesla or some of our like spies and Qs that tend to be very market maker heavy, right? You don't have a lot of surprises based on those moves. The efficiencies in the indexes is way higher than individual stocks. Okay, but here's where it gets even better. It wasn't the only opportunity on March 6th. We had one in LKQ, another one that's boring, right? 50-cent range, dollar range. Stop loss and take profit automatically generated by the pinch point scanner. Look at the difference. Volatility profile, we get a huge directional move. Underline rips up about 10%. 182% gain on a call option. Enough to turn $2,000 into $5,620. Okay, beef up the savings account. Splurge on a exciting vacation. We will see, winners and losers. I get it. Like, we're not perfect here. We've had 7 losses in the service, 41 winners. But I tell my students that this is what I'm saying about trading options. You should never be risking more than you can afford to lose. You should never be risking more than 1% on any trade, because it's about surviving and on to another good trade. Take a good trade, take a good trade, take a good trade. Probabilities stack up. So at this point, you might be wondering, what exactly gives us a go filter or go signal? And this is, again, before most traders even think about jumping in. You're not going to get a lot of technical confirmation, right? So we have to be, look, we're rewarded for our kind of courage and bravery of getting into these trades a little bit early. But that's the benefit. That's like the big benefit is we're not paying a lot for these options, and we give ourselves enough time. We usually get the benefit of that volatility profile. Okay, so it's a good question. It comes down to a simple pattern that's the heart of almost every stock movement, and that's a market cycle pattern. You maybe heard this before. Maybe you've heard the phrase accumulation, breakup, distribution, breakdown. Maybe those 4. But this is a very typical market cycle pattern. It's pretty timeless. I mean, I'd say this goes back 50 plus years. But it explains how and why stocks move as they do in certain cycles. Okay, so stocks can trade differently depending on which 4 stages that they're in. The accumulation phase is really when smart money is loading up on shares. This is a great time to be buying shares of the underlying. This is a great time to be, positioning for a move. And then we see the breakup phase, which all the gains are realized. This is, we could have a move of 5%. We could have a move of 20%. It's like, just depends on the amount of volatility we see in the individual stock. But the distribution phase is where most people end up chasing and starting to position fresh, even though the market's already made a big move. This is when they first start to hear about it, right? So the FOMO trade, oh my gosh, that one stock is up, 30% in the last month. So what do people do? They jump in and try to chase another move, thinking it's going to continue to do the same thing, when in fact, it's more of a distribution phase, which is when smart money is already getting rid of the shares that they acquired. They're getting rid to take their gains at that directional move. And then we typically see a reset. So that distribution happens where price goes sideways, and then we have a breakdown phase where things are starting to break supports and pull back. And this is what creates wave cycles in the markets, right? But if you chase at the wrong stage, you're going to lose. So what are we doing? Well, if you think about, I'm looking for stocks, I've said this whole presentation, boring, coiled, consolidated price action, which means what we are trading is we are trading the ends of an accumulation phase. We're trading the ends of a distribution phase. And that sets us up for a likely direction that's coming our way. Okay. So these 4 phases play out over all sorts of time frames. Here's Amazon on a 5-year window. Amazon for the last 5 years, it looks just like a market cycle pattern. Okay. You can also take Amazon down to a 30-minute time frame and see the same type of thing. It's not random, right? It might look random, but this is a market cycle pattern playing out all day long. Here's accumulation, then a big trend, distribution, breakdown, sideways, up, sideways, down, sideways, up, sideways, down, over and over and over again. Okay. I think we can agree that Wall Street does a pretty good job of controlling some price action. There's whales, there's sweeps, there's liquidity, there's high premiums, option prices, futures prices control the price action of the markets. But what Wall Street certainly does not do is sit around all day watching screens, manually searching for entries and exits. Okay, a lot of this is heavy quant trading, heavy algo trading that does a lot of the day-to-day price action or positioning. So in fact, this is kind of crazy here, especially the last 12 months or so. About 80% of all short-term trading is now fully automated. Okay, quants and algos. It's in the markets. What do? They program these quants and algos to be based on things that are repeatable, things that happen, naturally in the markets. So market cycle pattern is very consistent, which is why they program to do so, right? So pull up any chart, any time frame, you'll see the market cycle pattern play out over and over again. Here's Meta on a 15-minute time frame. Check out, the market cycle on a day-to-day basis. Sideways, up, sideways, down, sideways, up, sideways, down, sideways. Guess what? Up or down. So it's these 4 phases of the market cycle. That's the foundation of the pinch point scanner. What I said is we're going to trade the ends of accumulation, the ends of distribution, giving us a chance to participate in direction. And this is typically getting direction before it actually happens. Okay, this is when my go filter is looking to find us trades. Okay, so when we see the get sets and the goes, we're nearing the end of these accumulation and distribution cycles, which gives us a high probability for direction. So I'm looking for stocks. My pinch point scanner is looking for stocks. It's giving us stocks that spend an abnormally long amount of time coiling in an accumulation or distribution phase. And when I say, for a decent amount of time, I'm talking weeks or even months. So this is how I get my go filter. Okay. So if we see a get ready or a get set, I want to see that there's price action kind of condensing more, spending more time in the pressure cooker. They're still good. They're still fine. It's better than just a nothing, right? But when we're really pinched, when we're really coiled, that's when we get the type of crazy direction that we want. Okay. So this is why I filtered out to have those 3 phases. I personally like to just go straight to the go zone and try to find my trades. So it's a rare window that I call pinch point, especially in the go filter. And this is where we get very explosive moves within the coming days or weeks. So take an example here on AES. It's a utilities company, very boring, trading within like a 50-cent range. Stocks down over 27% just over a month. On May 5th, it didn't matter because we were looking at the pinch point scanner that flagged it for a go filter for a sudden move higher. So we have coiled and coiled, tighter and tighter and tighter, and it's practically forced to pinch. This is why it's in the go zone. This is why it's pinch point scanner. Okay. So when I say forced, I mean it, because the stock will spend sometimes weeks, even months building this pressure. Now, to some on the chart, it might look boring, but within a stock's volatility profile, we have these kind of chain reactions that would be a stop loss cascade, which is going to be like the short squeeze. Sometimes it's called the short cover and short squeeze, or the stop loss cascades where it starts to break structure. Okay. So if we see that, shorts are forced to buy back their shares or the squeezes are happening, this is when the stock takes off and moves very aggressive to the upside. This is where we get those big parabolic moves higher. Okay. Or a stop loss cascade kicks in when the bulls are losing control, when smart money's been selling and it's breaking key structure levels, key support levels, and it goes lower. Okay. So this is what happened with the AES pinch point, set it up as a go. We've been coiling within about $1 for weeks at a time. And look at the difference. We rip up 20% in the underlying in a matter of days. There's a parabolic move, but we found it ahead of time. We're positioned for cheap options. And the stock, 19% move in just 6 days. That's what we want. We want the stock to have the ability to move. Here's the best part. Because there was virtually zero interest in that flatline stock, the options were pretty cheap. That's how they pay out huge. So just a simple call option paid out 325%. $1,500 into 48.75 just under a week. We're down to about 9,500 stocks. That's still plenty of stocks to find some needles in the haystack. Stocks and ETFs, US, non-US. Okay, we can find pinch point stocks every single day. I look at my pinch point scanner every single week. Here's one on Cheesecake Factory just a couple days later. Same thing. We're coiled now to within about $1 range. It's pinched. This was the entire month of May, ready to go somewhere. Flags in the go filter from a pinch point scanner. Stop loss, take profit, expiration, duration. Likely options if you want to trade just a simple call option. It gives you that information inside the pinch point scanner, and you have nearly a double in just 4 days. Look at the stock. Boring, pinched, coiled, and then big stubborn one-sided movement up over 10% in the underlying. It's nearly a double, all from a boring stock that most traders wouldn't have touched, right? Or most traders would have been waiting for better confirmation to get in, and all of a sudden the options market changes everything. Premiums are higher. You're not going to get nearly the bang for your buck, right? So these didn't cost a fortune. 8ES was 55 cents a contract. Cake was 75 cents a contract. Even if you traded this with one contract, $55 risk, make 3 times that. Okay, 75 cents risk or $75 risk, make almost double that. It's not a bad trade, right? So big accounts or small accounts, it doesn't matter with pinch point scanner. My typical trade here, somewhere between $2.50 to $5 max risk on a lot of these trades, right? Does every trade work out? No. We've had some losses in the service, but not a lot. I mean, when we win 85.4% of our trades, we're not losing a lot, but there will be losses since it's going to happen. That's trading. So am I going all in on a single investment? No. I mean, literally, I've never said once in the pinch point like I really like this trade. I take everything in my go filter. I price them out, make sure we have some a 100% reward to risk calculated in, and then from there we take the trade if it's good liquidity, good volume. That's it. Like I don't care if it was Tesla over some random stock you never heard of. To me, it's a quality setup. Okay, so never risk more than you can afford to lose. But here's what takes it up a notch for pinch point scanner. We also have a zero lag momentum oscillator that will help us give us the nearest term direction. Okay, so whether we're going up or down with the best probability, we can take that if you want to be more of a directional based trader. So this is what the zero lag momentum oscillator is designed to tell us what to do. It alerts us when the stock has confirmed a move outside of our pinch point. So if we're breaking up or breaking down, that's what the zero lag momentum oscillator is doing for us. And it's right here inside the scanner. You have your ticker, you have your direction, whether it's a breakup or breakdown. Okay, so if we're going up, if you want to be long an option, great. If you want to just trade a simple call spread, great. Doesn't really matter, but obviously there's a directional bias. Or we're going down. Okay, so pretty simple to follow along. It's a pretty intuitive scanner where you have your underline, your direction, and what level of pinch you're getting. All right, and we should know this here, but I've said this for a while. A lot of people will say, bulls climb stairs, bears take the elevator. I like to say that bulls climb stairs, bears jump out of windows. Look at October 10th, look at November 20th, look at these crazy one-day sell-offs we've had in the market. They are so much bigger to the downside than when stocks usually have the steady grind and melt up to the upside. Yes. So when we do have a downside move, it tends to be a lot faster. Here's one on Worthington Steel, pinch for over a month. Okay. No major pressing news. December 10th, what do we have? It's in the go filter, pops up with a breakdown with a zero lag momentum oscillator. And what happens shortly after? Well, that coiled boring price action becomes a giant fall. Drops faster than a hot potato. We've seen, that's a huge drop. We're dropping $12 in a matter of weeks after being coiled for months. And there's this, boring stock that all of a sudden pays out huge. So $1,500 into 54.15 in less than a week. Is that retirement overnight type of money? No, that's not what we're talking about today. But it's enough to go out and play some golf with your friends, treat them to the dinner and drinks at the 19th hole and have some money left over, right? Or just grow your trading account. Here's another with Walmart. Okay, Walmart in 2024 was pretty much in straight breakout mode. Okay, most traders would have figured that that's kind of the end of it. There's no way it can go higher. I personally thought there'd be a correction on Walmart as well. But on December 16th, it popped up in the go filter. We were coiling within about a $1 or $2 range. And it said, okay, based on the zero lag momentum oscillator, we're looking at another upside move in Walmart. Stop loss and take profit provided by the pinch point scanner. Within a couple of days, you saw another almost 10% move on Walmart to the upside and nearly a triple digit winner with recommended options in the pinch point scanner. So as exciting as that would have been, the pinch point scanner gets even better because we do have, nearly 10,000 stocks. We do have the ability to find needles in the haystack every single day we look at the scanner. High conviction pinch setups. Stock that's ready in the go zone, click on the trade idea button, and from there the pinch point scanner fires off an automated alert. So you have your underline, gives you a little short summary of what's going on, suggested strike price, the trading range, expected moves, things like that. It looks just like this. So whether you want to trade in the breakup or breakdown mode, you want to trade it both directions, you want to stop loss and take profit target, all the option criteria you need for option buying. So if you just want to do simple buy options, buy a call, buy a put, everything's right there inside the pinch point scanner. Okay, so virtually everything you need to target your next big win. Here's one in SOLV, popped up in the go filter. Again, you're seeing this routinely, coiled, pinched, consolidated within a couple of dollars. Perfect pinch setup. Take the trade, follow the trade ID button on pinch point scanner, gives your SOV summary, custom options trade on the spot inside the pinch point scanner. Stop loss, take profit. What happens? Boom. Price action changes, coiled, pinch, consolidated to all of a sudden having a $12 move in the underline that's over 10% rip on the underline and a triple digit winner with some cost effective options. Cheap options, 163. Okay, $500 investment turns into 1315. Take the family out for a fancy dinner. Give the waitress a big fat tip. Have a few bucks left over. Can we do this to the downside? Of course. CORZ, coiled within about 50-cent ranges, sideways, choppy, consolidating. Breakdown set up on the pinch point scanner with a zero lag momentum oscillator. Check your trade idea button. No guesswork. Take the options that the pinch point scanner gives you if that's what you want to do. Keep it really simple. Follow the trade with the automated alert. This boring stock hasn't moved in weeks, and all of a sudden, you see a big move in the underline. It drops $3, like a 20% move in the underline. Options prices change aggressively. There's another big triple-digit winner on that drop, on that crash. $500 in that trade pays $18.25. Okay, normal starting stake at $2,500 turned into $9,000. Is that life-changing money? Maybe. Maybe for some, yes. Others, barely noticeable. But regardless of where you stand, if you're taking a trade, winning a trade, growing your account, having fun in the process, moving the needle in your day-to-day life, it's pretty good. Okay, catch up on some bills, replenish your savings, surprise your family with a weekend getaway, all from one high conviction pinch play. Now, I hope you can see right now, like example after example after example. You can see how powerful these pinch point scanner trades really are. And there's no download required. You can pull up the dashboard every single morning, click the go filter, and find your best list of pinch point stocks. From there, the automated alerts will spoon feed you practically everything you need to target your next big win. And I'm only looking for the best setups. So if we have a good pinch point, if we have a great pinch point, it is a trade that is worth taking. Okay. So do I just am I going to take 25 trades today? No. But of those 25, I could probably find 2, 3, or 4 that price out the right way, have the right volume, have the right liquidity, have the right technical setup. I want to make sure that the pinch point is not just like, is it today? I mean, I want to see prices that are consolidated for weeks, right? Okay, good stuff. Verizon, here's another one. Having a breakup on the zero lag momentum oscillator, pinched, within 50 cents or so. Stop loss and take profit given with the pinch point scanner. You can follow the options criteria inside the alert. And just like this, you see a nearly 10% move in the underlying. The stock goes exponential, completely one-sided price action. Enough for us to turn a cost-effective option into a triple-digit winner in just 8 days. So opportunity is pretty endless with this tool. I've spent a lot of time over my career just labor-intensive, finding trades. That is difficult. But if I can have a pinch point scanner that gives me excellent trade setups every single week at a glance, I've got 25 to look at right now. I mean, for me to take 30 to 60 minutes and go find, some trades within that 25, that list of 25 makes my life a lot easier. And, stocks that are likely going to move, primed to move. You don't have to wait days to get out, right? If everything works out as expected, your pinch point winner could be hopefully just a few weeks away. So I look at this. You have 2 choices here, right? You can chase, you can have FOMO, you can feel like you're, never really sticking to a good process that works over and over again. It's a noisy market, right? Trump is a noisy president. The administration is noisy. It's, far left versus far right. It's us versus them. It's you versus me. It's, K-shaped economy. It's the Fed. It's all that stuff. It's all noise. But the reality is we do have some pretty high valuations. I think, returns moving forward we're going to have lackluster returns with a lot of volatility. I think that's one thing that's almost a given is the market's ability to, continue to produce double-digit gains at, I don't know, a 23 times earnings for the index or individual stocks at 30 times earnings. That's going to be tough to keep outperforming that. Or you can ignore all that stuff. You can focus on, look, there are thousands and thousands of stocks to choose from, and they're all going to move. At one point or another, they're all going to be able to set up and move. So how about finding a great technical setup that's likely going to give us some direction, take a trade that prices out to our advantage, take a high conviction trade, high conviction setup, low risk, adequate reward, hit take profit consistently, automatically let the broker close out for a winner, and win 85% of your trades. That's what we've been doing since inception. Not too shabby. So nearly 10,000 stocks. 50+% gains, triple digit gains. If you go single direction, triple digit gains are very achievable. I tend to go both directions because I personally don't care what direction I get. I just want to see that price is going to move and give me some directional volatility. That's what gets me paid 85% of the time. But these are also cost-effective options, right? We've hit some major milestones here. But pinch point scanner, here's what's going to happen. If you want to join me for a pinch point scanner dashboard, get the dashboard, get the scanner. It's just a website away. It's inside your members portal, and it has everything you need for a full trade alert. So the pinch point scanner tool all by itself will give you everything you need for an option trade. So you want to go directionally bullish, directionally bearish based on the pinch point setup and the algorithm and the technicals built into it. Great. On top of that, for my lifetime members of Pinch Point Scanner, I'm running a 12-month service with you right alongside you where I'm taking all these trades that I like. So this weekend, Tuesday, Thursday, if you're a new Pinch Point member, great. Join me for my live sessions. If you're a lifetime Pinch Point member, those alerts will continue to come week after week after week. Okay, so we have a getting started guide with a video series inside Pinch Point Scanner. There is no install needed. It's just inside your members portal for one-click trading, and you can jump in your Pinch Point Scanner and just access the scanner right away. Just a couple seconds, click a few buttons. You've got 9,500 stocks. Go right to the go filter. I'll show you that before we're done here today and find what's actionable. Okay, we have a customer support team standing by every single day, 10 a.m. to 1 p.m. Eastern time to answer any questions. If they can't answer it on my behalf, they'll send it directly to me. But I also said I'm going to train you on how to use it. So this combination class we have on Tuesday, Thursday, I'm going to treat it like a trading session. But if I have any questions on how to use the pinch point scanner, how to do some best practices, I'll also sprinkle that into my master classes this week for my trading on Tuesdays and Thursdays, or this week, Tuesday, Thursday. Cool. All right. So Tuesday, Thursday this week, 2 p.m. Eastern time, master classes, trading sessions. Let's find some trades. That's my favorite part about doing these sessions with Pinch Point is I'm just going to go find some good trades. Period. That's how we've had 85% winners. Just the sessions I'm going to run this week. That's exactly what we've been doing for this entire last 5 or 6 months, right? So I've really, I've shown a lot of examples here, but I'd say it's just kind of scratching the surface of what the Pinch Point Scanner is capable of today. So when you click on the trade at a button, it's everything you need for a trade alert. If you click on inspect, we got some other tools and bells and whistles inside here. We have price charts on multiple time frames. We have the firepower and the volume behind every single move, right? And on top of that, I think the Pinch Point Scanner from a technical standpoint is one of the most accurate prediction system that I've ever built. If I were to say, Chris, how do you find a trade? Technically speaking, what's under the hood of how I find a good trade, the Pinch Point Scanner is what I need prices to be doing for me to find a high conviction setup, right? If you want to time the trade, especially trading options, it's price and time. So when we need a directional move, if I'm trading this directionally, if we need a directional move, I obviously want to have my time in a big enough window where it gives the underlying asset a chance to move, right? So this is why I take this as it's a swing trading system. If I give myself, 40, 50, 60 days on the high end, maybe 80 to 90 days, we're going to see some likely direction. And that likely direction gets us paid a high percentage of the time. Okay. So I'll coach you on how I use it. I'll sprinkle it into the 2-day workshop this week, Tuesday, Thursday at 2 p.m. Eastern time. What do I like to do with the Pinch Point Scanner? If you have your favorite underlying assets, if you like to trade, certain tech stocks, if you like to trade certain ETFs, if you like to trade certain individual stocks, keep those handy and type them in the Pinch Point Scanner and find good technical setups. You're going to be rewarded from a time standpoint. You'll be rewarded much better when things are pinched in some capacity versus just automatically assuming that price has to move. If you're trading directionally, markets come in phases. The markets are not always moving. Okay. All right. So publisher team want to set this thing a la carte at $39.95. On my website, chrispulvertrading.com, you're going to see that's what it is. $39.95 for 1-year access to the Pinch Point Scanner. But that's fair. I think a la carte off the street, we got a great tool and dashboard and it does all the heavy lifting for you. But if you trade with me live in the daily profit plan, you're in some of my services, we're going to do something better. So here's the deal. Okay. Watching us today, $39.95 is not access to Pinch Point Scanner. We have a $2,000 founding member discount, which brings us down to $19.95 for 1 year. And for the first 50 traders in the door, and for those that want to join me this week for my masterclass on Tuesday and Thursday, we'll knock off another $500. So we have the Pinch Point Scanner all the way down to $14.95 for 12 months access. Okay, but there's a catch. This week, if we knock out these 50 spots, then we're going to knock off that $500 bonus. So enrollment shutdown. You can still get the scanner for $19.95, but that 50 spot is going to be another $500 bonus if you want it. So if you want to secure your lowest price for pinch point scanner for the 12 months, grab your early bird discount, grab your funded member discount, grab your $500 bonus for jumping into one of the 50 spots of this week's cohort, and click link in the chat. Okay, so that's prosperity.pub.com/pinch, or give us a call directly 904-706-3537. If you call our team directly, also have them walk you through our one-click trading member portal and show that literally just a few clicks of the button, you can see the same scanner that I see, and I'm going to show you here in about 2 minutes. So prosperitybub.com/pinch, or call us 904-706-3537. Okay, that's $14.95 for instant access to the pinch point scanner for the next 12 months. Once you secure your membership today, don't close the next page, because if you upgrade to lifetime, the masterclass I'm running this week, my trading sessions, the trade alerts that I take personally for the next 12 months, you will get those as a bonus. So if you are a lifetime pinch point member, means that you have the dashboard forever, okay? I will be running a trade alert service for the next 12 months. All right. So my live trading room, my pinch point alerts will be for you the next 12 months. This is the 85.4% win rates that we've taken with the service so far. Portfolio's up over $33,000, 41 trades that are winning or winners, and 7 losses. And we still have some pending orders that are running right now that we still have some live trades in until we've got some December expirations. We've got some February, March expirations. We've done some swing trading here the last couple of weeks, but it's all inside of a private member Telegram that you'll have for my alerts. So if you like to trade right alongside me with real money trades, like I said, it's all about defined risk. None of these trades are going to be a make or break. Like if I win, I expect to win. If I lose, annoyed, but it is what it is. I'll go find another great trade. If for every 100 trades I take, I ever win 85 of them, I can afford to take a couple losses, and it's going to happen eventually, right? But all we're doing is trading price and time. But you can look over my shoulder, take the exact same trades that I do. It's inside that Telegram channel in the Pinch Point Scanner live trading room. And what I like to show, and you'll see this week as well on my masterclasses, I personally like the win both ways trade, which means it doesn't matter what we have on the underlying asset. If it is pinched and it's in the go zone, it is likely going to be an up or down move. I don't care what direction it goes, but I can get paid if it goes up or down. As long as the stock moves, I will get paid. Okay. And this is what we're seeing is we're practically getting the underlying asset forced to move when it's in the pinch point, and whether it goes up or down, we get paid. Okay. So that pinch point live trading room is Telegram access for my lifetime members. So consider that when if you want to upgrade to lifetime, you'll see that you get the alert service and the Telegram channel access for my trades. And this is the only, it's only on Telegram. I don't send it out any other way. So if you don't like Telegram, then just get the pinch point scanner. But if you want my trades, you like how I trade, you're comfortable following Telegram at the convenience of your fingertips, which is notifications instantaneously, within about 10 to 15 seconds of me actually placing the trade live, you can have it on Telegram. Okay, so if you want in, consider upgrading to lifetime pinch point scanner. You'll get the scanner for a lifetime. You get 12 months of my alerts and my exact trades. Cool. All right. So classes this week on Tuesday and Thursday, 2 p.m. Eastern time. We'll dive in. I'll share this pinch point scanner here in a moment. I've got 25 stocks for the day. This is one of the best tools that I've ever built. I've built a lot of robots and a lot of things that will help me trading over the year. I create strategies and courses, and I build tools that I use personally as a trader. Okay. So, Greg, 8 wins, 0 losses, $4,300. Dave, 24 for 24. Rich, 2661 in closed trades. Kathy's making $1,000 a day on average. Somebody paid for the service in the first week. Lifetime members, all access. I mean, I'm pretty confident here for the last 10 plus years of teaching traders and helping traders that I've helped some traders be very successful over the years. And that's my point. I want to help traders be more successful. I want to help traders learn faster. Nothing about this market. We can always learn. We can always learn more. I'm never satisfied. I don't think I've got it all figured out. I think what I do well is I manage risk. And, I know when it's appropriate to kind of step on the gas, be a bit more aggressive. But for the most part, I'm a risk manager, because it's amazing how easy the upside is. But you don't want to be caught on the wrong side of something. You don't want to be, over leveraged and overexposed when the market's going to take back 10, 20, 30% of your portfolio just by, having a weird cycle. having some geopolitical risk off events. It's not fun. So we need to manage the downside more than anything, which when we do it here with pinch point scanner, everything is risk defined. Okay. So whether the market is in a bull market or a bear market, it doesn't really matter. We can make some money. Okay. All right. So just testimonials. That's all good. Can't wait to hear from you. I want to see another 30, 40, 50 people in the room this week for pinch point scanner. $14.95 instant access. That gets you the $2,000 bonuses as well as the $500 cohort discount. And we're looking for things to trade in a pretty tight range when options are cheap and give us a nice directional move. Even an underlying move of 2 to 3%, and usually that's on the low end. Usually our underlying moves are sometimes 5 to 10%, which means our options prices pay out really, really well. So when the breakout finally hits, we typically see a very stubborn, one-sided parabolic type move. Whether it's up or down, it doesn't matter. But just like we saw with AOS, that $2 range rips up, and all of a sudden we see pinch point scanner gives the automated trade alert with the criteria, and what happens? The underlying move rips straight up, right? Goes from weeks and weeks and weeks of nothing to then another week or so of just straight direction, and we get like a 10+% move in the underlying. Our options were cheap enough, we're in before it all happened, and then a triple-digit gain in just a couple of days. So $2,500 turns into 58.75 balance in 48 hours, covers your membership. One of many trades we'll take. One of the 41 winners that would help pay for the service. All right. So 50 spots, some Q&A and some FAQs here. How do I access Pinch Point Scanner? You will see this when you sign up for Pinch Point Scanner. Instantly in your one-click trading member portal, you can click on Pinch Point Scanner, access a scanner, and go right to the same scanner that I'll show you here in just a few minutes. So you can go right to your Go Zone and see what trades are actionable this week. If you're a beginner, is Pinch Point Scanner a good fit for me? I think yes. Like I said, I spent hours and hours and hours of my week just finding trades. Now those hours are I can spend literally 5 seconds clicking on the Go Zone and the Go filter, and then I spend what I do spend is 30 minutes pricing out my trades rather than trying to find them and then price them out. I now save myself tons of hours every single week, and I can just focus on pricing them out in the options platform to make sure it's the best trade, best setup that we can get. So I think if you're I'm a 20+ year trader. This is a fantastic tool for me. I built it because I want to take these trades. So if I can find good trades and I have a tool that can spoon feed me great trades, I think if I'm a beginner, absolutely this is a great tool to have. Average trade size. So anywhere between about $50 to $300 is our average debit. A lot of these trades are debits. Okay. So I'm paying up to $50 to make $50. A lot of these are offering at least a 1-to-1. But I think the most expensive debit we've had is maybe $5 or so. Typically it's less than that. So between $50 to $300 is the average trade, for one contract, low risk. So small accounts we can manage. Absolutely. I consider that for all my services. I want to be able to trade cost effectively for everybody. Average trade, it varies. A lot of these trades I put on is swing trades. So I'm looking at somewhere between 45 to 60 days out for a lot of these trades. A lot of times our profits can happen within a couple of weeks. So we've taken trades we've been paid within the same week. We've had trades that have taken, a month to play out, but it's a swing trade service. I don't want to check the screens all day. I don't want to micromanage my positions. I want to put them in the broker platform, get them filled, set the take profit, and then have a nice little pleasant surprise, which is broker close me out automatically for take profits. So I'd say on average, if we put a trade in for a 60-day duration, we're probably going to take profit within about 20 to 30 days usually, once we see direction. Should we worry about trading this bear market? Well, number one, it's not a bear market, but number two, if we have a bear market, totally fine. You'll see lots of breakdowns in the pinch point scanner based on real-time momentum oscillators. You'll also see that, in a bull or bear market, either way, price is going to consolidate and then it's going to break out up or down, right? Market cycles will continue to play out. Typically in a bear market or a downward market, you'll just have bigger swings and more volatility and more direction. So it actually, I'm not going to say it makes it easier necessarily, but when you get direction, bear markets tend to claw a little bit deeper and faster. So you tend to get paid a little bit faster that way. So I don't care. It's like we can be in a sideways market. You're going to have individual stocks that move. You're going to have a bull market, bear market. You'll have individual stocks that move. There's always something to trade. Okay. If you have any questions on how to get started, we have a customer service team that's standing by every single day, 10 a.m. to 1 p.m. every single day. You have a 14-day money back guarantee. That's why I'm doing the 2-day workshop this week. How many trades can we expect from the pinch point scanner? So this week we're going to price out, 20 to 30 trades. I'm hoping I could easily find, 2, 3, 4 trades easily. And usually per month, we're probably looking at like five to six trades per month, I would say on average. So it's active enough. I mean, I'm not, all in, and I want this to be a high quality service. So when I get 20 trades to look at and I can find 2 or 3 that really price out well and I take the trades, I'll take the trade. So, I mean, we have the service has been active since about, I think, April or May of this year. So, about 7 months in the service, and we've had 87 trades listed. So, it's pretty active, right? I mean, it's active enough where a good scan, a good setup, a good trade. Okay. How do you receive the alerts in the Pinch Point Live Trade Room? So, if you upgrade to the lifetime of the scanner, your Pinch Point Live Trade Room and alerts will be inside of Telegram. It's a members only Telegram for those of you that have the lifetime Pinch Point. Okay. All right. I do want to find some trades here. That's my final slide. So I do want to find some trades. Like I said, I'll show you what I have right now. I'm going to do a quick refresh on the scanner. And you know what? I'll just do this. I'm going to go into my one-click trading. I'm going to log back in and do this from scratch. So this is how easy it is. Once you get access to the Pinch Point scanner, which I have right here. So let's say from the time you log in. So log into your member portal inside of our one-click trading. Oops, I forgot. So by the time you log in, and you can search for your Pinch Point. Okay, so trading room or scanner. Click on scanner, access the scanner. There it is. Almost 9,600 stocks filtered down to 22 that are actionable. This is what we'll be focused on and pricing out this week. So 22 stocks. This is my watch list. This is what I think are our actionable items. Are they all going to be trade worthy? No, they're not. Some have low interest, low open interest. Some have low volume. So I do a filter here. Let's try to find, decent amount of volume. Let's make sure we have some likely volatility. I also look back to see how does this stock behave, right? Have I seen previous pinches in this underlying, and how does it behave? What I don't want to see is a stock that has the tendency to, like pinch for 30 days at a time. And then when it does move, it moves up a little bit and then comes right back down and pinches. Like I want to see some explosive parabolic moves, and that is a good volatility profile for me to trade. So we'll talk about that on Tuesday, Thursday this week, but this is the list. So I got 22 right now that I would say are actionable. This is my spoon feeding where the pinch point gives me exactly what I want to see. These are trades that are all likely to give us some direction, up or down, it doesn't matter. Now, if you have a certain watch list that you really like, your favorite stocks, your favorite tickers, your favorite underlines, find them. Everyone likes to trade the SPY. So click on SPY. Okay. And if you go to the SPY, check on your pinch. The SPY is in a get ready. Now, get ready is of my 3 phases here. Get ready, get set, and go. So if the SPY is going to consolidate a little bit longer and it goes from a get ready to a go or to a get set, this is where we potentially, I'd say, I'll put an asterisk here. This is potentially a good looking trade in the get set. It's rare, very, very rare to see the SPY, the Qs, Mag 7 stocks, very, very like option heavy stocks and high volume stocks trade into the go. So if it's been weeks and weeks of consolidation and it's in a get set, I'm still going to take the trade. Okay. Why? Because you can trade price and time and options and have it work. But nice thing is it's better than nothing. You want direction. It's like at least it's coiling into some capacity where the market's going to have to send the energy somewhere else. Okay, QQQ, take a look at this one. Let's inspect the NASDAQ. Also in a get ready. So, it's not a surprise that I'm seeing this one. Price action is giving us kind of this broadening pattern. This is a consolidation pattern. It's not exact because the consolidation pattern I'd like to see would be the pinch where I see prices getting narrower, not wider. A broadening pattern has higher highs and lower lows. So that's what we're dealing with. It's like, yeah, we're going to see some consolidation, but I want to see it get into the, get set. But it's still pinched in some capacity. Get ready is better than nothing. That's QQQ. Let's go to the Russell. Very volatile on the Russell, but let's inspect it. No pinch on the Russell. Okay. Everyone's talking about NVIDIA or Google, right? Let's check NVIDIA. Okay. I'd like to see NVIDIA spend a little bit more time consolidating, get into a get set if possible. That'd be a good actionable trade there. Tesla. No pinch. What else? Google's been a high flyer these last couple of weeks. So if you have your favorite tickers, come to me with them. You come into class on Tuesday, Thursday, give me your favorite tickers. You can trade leverage ETFs. You can trade inverse ETFs. You can trade, of 9,500 tickers, there's 4,000 US traded companies. So we have, the layers of derivatives on top of this. So whether it's I think you know this, but there's like 1.5 leverage NVIDIA. There's two times leverage NVIDIA. It was even proposed this year that the market's offering 5 times leverage. It's like, that's insane to me that people would be even wanting that. But it's like, if retail crowds demand it, Wall Street will gladly deliver it, and they don't care if they take your money. So look, the market already moves plenty. I don't think you need a lot of leverage to make money in these markets. I've done just fine over the last 2 decades of trading, and I haven't used leverage really at all outside of trading currencies. But in options, you naturally get leverage because it's far less capital intensive, right? So anyway, Apple. Yep, let's check Apple. Apple, right here. Inspect. Check out your pinch. Oh, Apple. Let's talk about that this week. Apple's looking good. Very nice. There it is. So Apple is in the get set filter. I like that. Plenty of volume, plenty of liquidity, and a breakup. Like me some Apple. Yeah, we'll take a look at that one this week. That's awesome. Perfect. Let's see here. Is it better to work with a get ready or go? Personally, the go is like the premium, because that shows we've been consolidating for weeks and weeks and weeks. A get ready is like things we either came off a directional move and it's starting to remember we have those market cycles, right? So accumulation, we just came off of a cycle and we're just starting either the accumulation or distribution and the get ready. So what I want to see is by the time we're at maybe the halfway point of this, it might be into get set. If we're near the end of this, we're at the go. So the best trade to me is a go filter, because we've been consolidating now and pinching for weeks at a time. And that to me is a more, that's less time in the trade, right? Because if we took the trade now, it might spend weeks consolidating, which, if you're getting directional on options and nothing happens, we're trading spreads here. So I'm not necessarily, losing out on time decay, but I certainly need direction to kick in at some point. So the more coiled I can get, the more pinched I can get, the more likely I'm going to get direction as a result. That's why I like to go get sets and goes, right? So my favorite watch list items on the get sets, my overall default is going to be the go filter. Every trade you've taken so far has been in the go filter. 85.4% winners have been in the go filter. So I don't think there's any reason to complicate it. If you have favorite watch list items, use them. Okay, but the go is the default, and you can be inside the classroom, instant access, search for your pinch point scanner, click on it, and scanner's right here. You see the exact same tool that I see. So let's go all. Let's get rid of the search bar here, and now we'll go back to the go filter. So when we start class tomorrow, I will remember, I'm going to write this down for Apple. Apple was in get set, which I like. Okay, let's actually look at get set for a moment. Let's look at some of the highest volume get sets. So DNB, IPG, Apple, WBD, Comcast, Moderna, Wells Fargo, Oxy, that's petroleum, Occidental Petroleum, Procter & Gamble, Philip Morris. Again, these are get sets. They're fine. Plenty of liquidity. But how long had they been pinching? Maybe a couple weeks? Well, this time of year, I don't expect there to be a big directional move. It's more of like a drift. Can the market drift? Well, let's give it more time. So any trades I'm taking are likely going to be looking out to like February, March expirations to be safe. Give ourselves plenty of price and time opportunities. So that's a look at it. 175. That's a lot to also filter down. If I'm going to look and price out 175 different trades, that's going to be pretty intense. But go high volume, find some good tickers, you know, like Apple in the next 90 days, we'll get direction. Just make sure we're not paying for it. I don't want to overpay for Apple Premium. Go Filter, these are primed. Good volume here. Anything over 250 to 500K, I'm pretty happy with. But I will spend the time pricing these out. We don't need to have these be perfect, but like PRI, super low volume. So it's probably going to be like a low open interest stock, which means not a lot of liquidity, which is okay. We can still find a great trade in, maybe 10 of these. But I'm going to price as many out as I can. If we find 2, 3, 4, 5 trades we take this week, that's what I've been doing for the last 7 months, and we've been winning a lot of our trades. Okay.
Very nice.
Cool.
What's up, Chris? I'm here.
What's up, Blake? Hey, man. Good.
I've been here in the background. I've been working on stuff. I've just been listening to you. You seem like you're doing pretty good.
Thanks. I see the question there from Maria on what type of trades. So there's a variety, Maria. I mean, directionally, they are directional trades. So you can do a long call, you can do a long put. That's the simplest. You can do it'd be a bull call spread, which is a debit spread, a bear put spread, which is a debit spread, and then my combo is going to be bull call plus bear put. Reason why is because if I'm just trading simple direction, I don't care what I get, but it's going to be define risk, define reward, hit the take profit. All I need is price to deliver some direction. And the nice part is if I go out 60 days, if we get a decent enough directional move, these combo trades can get us paid within a couple of weeks. So I don't have to wait, 60 days to get paid. I can get paid within a couple of weeks. But I just need to see price gives us direction. If price gives us direction, we are positioned for a winner. If you're trading both ways, you're positioned for a winner. If you're trading based on the zero lag momentum oscillator, which is this directional column right here, if you're going a single direction, then obviously you want to make sure that if you follow the trade here and the direction is correct, then you're going to get paid on the direction. So I personally like to default on this side just because I don't care, because it's very easy for the market to steadily be bullish, but if it flips to go bearish, your bull trades are going to suck. I know there will be individual bull trades that work out, but for the most part, the broader market, if you've seen this in those sell days, like October 10th, it's like 78% of the market was red. November 20th on that NVIDIA sell-off candle, I mean, we started off 1.5% positive for the day and swung down in the index to negative 1.5. That's happened 3 times in 30 years. Those days you have like 70+% of the entire market is red. So the probability is the bigger market is going to still lead the flows. So if the broader market is down, I still want to have an opportunity to make money if prices are falling. If the broader market is up, markets, put in, I mean, there's squeezes all the time where it's like, the stock that's beat up, this value stock, rotation out of Mag 7, rotation out of tech, blah, blah, blah. There's all sorts of reasons for the market to have the ability to go up or down in a short term, kind of one-off move. But the broader market is also going to be a contributor to that. So this is what I like to trade. So if you want just the simple, level 1 options or level 0 options, you can certainly do this with a pinch point scanner. You'll see me trade this way this week, is I'll probably just put in some simple spread trades, and that'll help me get, whether it's up or down over the next 60 days, get us some winners logged in. And again, expiration wise, I want to make sure like we're trading through the holidays, which tends to be not a big move. Like we don't see a lot of movement through the holidays. It's usually pretty light volume. But once we get into like January, 15th or so, you're going to start seeing some pretty heavy flows come back in the market. Volume returns in full, and off we go for some good directions.
Like even right now, you're thinking low volume.
I mean, we have, I mean, for a day to day, I mean, we have a couple of short-term opportunities for the next 2 or 3 weeks, but for a trade like this with, pinch point scanner is a swing system. So
right.
I'm not going to see a lot of, like, I'm not going to take a pinch point trade and only go out a couple of weeks. I'm going to go out, probably 2 to 3 months.
I would agree with that.
Yeah. You got to give these pinches time to work, because right now, if they're pinched, they're going to probably stay pinched for another couple of weeks. If they start to move, it could be end of the year. It could be, beginning of 2026, once we start to see some earnings catalysts and some overall flows come back to the market with like, full conviction volume.
Absolutely.
Yep.
And normally this time of year, everyone talks about the Santa rally.
Yeah, it is that time. I mean, so technically a Santa rally, it's only a 7-day window. So Santa rally is from Christmas Eve to New Year's Day. That's technically the Santa rally, but a lot of people think of the entire holiday window from Thanksgiving to New Year's. They call that the Santa rally. I don't. Technically, it's a 7-day window, but
7 days.
Santa in a 7-day window hasn't shown up the last couple of years. Like last year,
He
Santa
has
was a
not.
disappointment. 2023, Santa was a disappointment. This year, I have no idea. I have very little expectations outside of the market's already up to 13, 14, 50% year to date. If we get a Santa rally, I mean, history says that December's are pretty bullish. November, I mean, one thing, Blake, you probably saw this, but the November finished with a positive month. Another like long wick. Look at this candle, man. So November, even though it was a red candle, I believe we still technically closed higher. So we
Oh,
opened
yeah.
higher, closed lower, but we were still higher than October's close. So even
Yeah.
though this is a red candle, we actually technically had, like, we're still continuing with this crazy. I mean, this is April from that ridiculous peak to trough, but we closed higher. Even though it was a red candle, it was technically a gain. From October's close to November's close was a gain.
Yeah, I saw a bunch of people on X posting this exact same chart. They're like, the markets are coming down. I'm like, I don't know, man. We've done that before and propped right back up. So
Yep. So I think if we're
hard to
lucky, I
say.
mean, this. I mean, think about this though. Just in a given year, I mean, the market's volatility, we had over 40 some percent, right? We saw a 40 plus percent
crazy.
swing from low to high. I mean, if the market's going to hang out at year to date 15.6, that's still a heck of a return for the broader market, considering we were down 20% at one
Yeah.
point this year.
Yeah, absolutely. That is a really good comeback right there for America's 401ks.
Yeah. So to finish on that note, at least like just hang in there for the rest of the year, I think would be a big win for a lot of traders versus seeing like a holiday dump where the market's down 10% at the end of the year. That would feel pretty discouraging.
It would.
So I think to keep sentiment, I mean, sentiment's already terrible, but to keep it like keep the markets up and keep kind of investor sentiment, I would say somewhat satisfied. It's like we don't really want to do too much more than we already had a 5 or 6% correction already. That was November. We probably want to see the markets cling to anywhere between 10% year to date, or obviously if it goes up to fresh all-time highs, getting up near 20% year to date. 70, 80, if you want to mark this down, 70, 80. So 7,080 on the SPX is around a year to date 20%. I'm not saying we close there, but it's like if this market does have a holiday rally and we can get up there, that's a nice way to finish out the year. It would make me a little cautious going into 2026. I still expect like a 10+% correction, if not more, for 2026.
I would agree.
I think that looking, if let's say we're up here, I would look at this previous level of resistance to offer support and see if the market, finds it, and off we go. If I'm in a position for it, I'm kind of cautiously bullish if it continues higher, but where I'd start positioning for, maybe a buy the dip would be at that like 6150 zone. And then, we're talking 7,500, we're talking 8,000. Just let it rip. I mean, I think the biggest disruption to the S&P or the markets right now would be not really until fall of 2026. It's like, I think Trump would have to lose the midterms in a big way for the markets to basically say, oh crap, everything's going to change now. It's not pro business. It's not pro AI. It's going to be, here's the interesting thing is the K-shaped economy. Okay. If it's Trump loses the midterms, we go from, the trajectory right now is we're trying to keep the K going, but we're trying to flip the bottom into more of like an E. We want to have like an E-shaped recovery instead of a K. But I think with the Democrats, I think their agenda might be, let's hurt the K and let's try to help those that are behind. So
Sure.
you hurt the wealth effect could really, really damage the stock market, possibly hurt the real estate market, and then you try to get some handouts and social programs that help the lower end. That it could be very, very volatile for price action. So, like I said, right now, I mean, Republicans still have the majority. 401ks are still pretty happy. Investors are still pretty happy. It's a lot of noise, but if the market doesn't have a major policy disruption, I think the market continues to churn higher.
Yeah,
But expect volatility.
absolutely.
That's my big picture.
We don't have any big earnings either until next year and what?
Yeah, it'll be
March?
you'll see some like February, March earnings will be the big ones. They'll be the big ones will start getting sprinkled in like end of January, early February. Start getting your it'll lead by financials, then Mag 7's always a big one of big tech.
I'll be watching that. I think the world's going to be watching those. So like maybe right now we just got this, like you said, trade what you see.
Yeah, well, I mean, think about Nvidia just on that day, the 20th. I mean,
Yeah.
You don't think the world's watching. It's like,
Yeah.
I mean, NVIDIA right now, and also for this structure, it's like NVIDIA put in a little bit of a topping pattern. We have a pretty good support level, but if this
Got a
support
nice floor.
breaks, if that support breaks, NVIDIA is big enough that it's going to drag everything with it. I mean, we're talking
Yeah.
how many companies now are creeping up into $4 trillion. I think Google just did. So you've got
Lilly
NVIDIA.
just did too. LLY added
No, not
another.
4 trillion. Not
Oh,
four.
not four. No.
Yeah, I was going to
they
say
just
4 trillion.
I think they're at a trillion.
They're at
though.
1. Yeah, they're at 1.
Yeah,
What a crazy. I mean, what a year, man.
I know. Wasn't it crazy?
Crazy, dude. Yeah, so Google, I think Google officially crossed. They're at 3.81, so they might have given a little bit back here, but they are creeping up to 4 trillion. NVIDIA is 4 trillion. Apple is 4 trillion. 4.11. Microsoft, I still think, is 4 trillion.
Yep.
Oh, they were 4 up here. They were 4 up here. They've given it back. But yeah, between 3 and 4 trillion, that's a lot of companies that we have.
Yeah.
But it's, I mean, the earnings matter. It's like
look,
they're so important to keep this
level.
keep these flows and optimism going. So good bounce off the 200 day though. We'll see if Microsoft can kind of hang in there by the end of the year.
Could be interesting. This is so interesting to me how things are shaping up for the end of the year.
For sure.
Because we've got NVIDIA. I mean, it's me and Roger were talking about NVIDIA on Friday, and we're like, if NVIDIA looked like PLTR, it would be a buy. Like PLTR is starting to look like could be on the way back up.
Yeah, I mean, as long as you're not taking on all this potential risk. I mean, if it was defined options, then sure.
Sure.
But yeah, I mean, Palantir's it's
definitely toppish.
Well, it's just so fast, so quickly. The valuations are obscene. I don't think the market cares, but still, where can it go? It shouldn't break below this. If you want to stay bullish, it shouldn't do much damage below 140.
Yep.
If it goes below 140, look left.
Watch out.
Look at your low to high. It's like, I mean, this is the type of stock where it's subject to those really aggressive rotations, right? Mm-hmm. Everyone made a lot of money on Palantir, and all of a sudden it rotates, and when it rotates hard, and this thing could be down, 50 to 70%, and everyone's like, either they're caught buying up here and they're getting crushed on this correction, or you just kind of wait and see, like, is this stock still good? I don't like the idea that this stock could have like a 70 to 80% pullback, and it's like, I guess it's still a good stock, but valuations are a little high.
Yep, I completely agree.
So it's stocks like this where if you see a rotation away from, if Palantir's down 50%, that's why you're going to be a little bit more defensive. What you want to see from the sector standpoint is that was weird. Did this change this whole thing? The hell, dude? I could have. I was like, what happened to my spider sector? Huh? Did they change the whole thing to State Street?
Did they?
Must be. I was usually doing like the at a glance stuff, and it was like the SPDR. Now it looks like State Street has that. So anyway, let's go back to this. All right, sector tracker. Yeah, this is what I look for. So the last month, healthcare, best performer; information technology, worst performer. Last 5 days, everything was green with that little Thanksgiving rally. Last 3 months, I mean, you're starting to sense a little bit of the rotation. Healthcare, big one. This is all Google led. Information technology is weighted with Google primarily. Go to weight. Yep. You've got or is Google Communication Services? Must be Communication Services in Google.
It might be.
Yep. So we've got here's the weight. Meta and Google for communication services.
Warner Brothers on there too, huh?
Was, but I mean their weight is nothing though.
Yeah.
I think it's maybe with the biggest change. Yeah, big. I mean, it's one of the best performers, but yeah, they've done all sorts of weird mergers. I think they're buying and acquiring more like streaming stuff and
Paramount or something.
Yep. I mean, their price. What is it? WBD. Yep.
Yeah. I was actually looking at getting long some WBD, but I don't know. They used to be worth a lot more.
It was a spinoff. I mean, I was assigned WBD from, I think it was Paramount, and then it spun off to Warner Brothers Discovery. So I was assigned the shares. I mean, I didn't hang on to it through this trough, but
Can't blame you.
Not a bad run. I don't care. I don't even know what I think I just pulled a break even or sold some calls and got out for a couple bucks, but nothing crazy. But whatever. Anyway, yeah, man. Look, the important thing
Anywho.
is we're gonna have some good trades on pinch point. We're running a 2-day masterclass this week on Tuesday and Thursday, and we will just stick to the process. We will trade what looks good. So
I
pinch
agree.
point showing 22 great setups. I'll price them out. We'll do this all together in class on Tuesday at 2 p.m., Thursday 2 p.m. If we get more on the list or less on the list, we'll make the appropriate changes. I'll go in the get sets and see what's high volume in here to take a look at. I want to see what Apple looks like from a pinch point scanner and technical standpoint, and we'll get some other big volume stocks in here as well. So it'll be a fun class. If you want to join me Tuesday and Thursday this week, jump into my pinch point scanner. You can get the scanner for $14.95. If you want to get a lifetime upgrade to that, you'll get 12 months of my alerts to go with that. That's what we've been doing for the last 7 months, where we've had about 85% of our trades of winners. So was it AT&T? I still have shares of that. I could have swore it was something else that spun off that, like Paramount became a WBD or something. I thought.
Well, and T still exists, so
yeah. Unless they spun off a T and then they just separated it to WBD, but I could have swore it was like a Paramount was my. I want to say I had a PARA that became WBD. It doesn't matter at this point.
Yeah.
Anyway,
Regardless.
So now we got to go State Street for this. I don't like the look of this visually. I'm not a fan.
When you pulled that up, I was like, "What is this?" I was like, "I've never seen that before."
Yeah.
I switched it over.
So how about year to date? Tech is still leading the way. This is one thing that is encouraging about year-to-date performance is, our biggest bull markets have been led by tech. Our biggest bear markets have been led by tech. So I think that as much as people are hating on this Mag 7 stuff, you still kind of need it because these companies are so big and so important that you want to see them do well. You want to see resiliency. The one question I'm asking for 2026 is, will the U.S. still be a good performer, or will it be a non-U.S. year?
Right.
Like one of my better performances this year has been trading non-US. I traded China and Europe and India. Some of those ETFs that are non-US based have done really, really well. I'm long the Nikkei for Japan, and that's done really well. Those are up 20+% year to date. I think there's an argument that a lot of non-US related assets could perform very well. They're not as liquid. So if you're an option trader, especially, they're not nearly as liquid. But as far as like portfolio allocation, having some non-US exposure could be pretty worthwhile. But there's always something. But either way, year to date, the nice thing is even consumer staples, as boring as it is getting a little bit of love. It's still, you have every sector green. So it's hard to look at this and say, bear market. It's hard to look at this and say recession when you still have a pretty solid performance overall. Plus or minus the year to date change. I mean, tech is up. Let's see here, 23.09%. I mean, utilities has been like the big one for me. Boring. But the ability to get like dividends and kind of cash heavy utility stocks that also have price appreciation, that's been a big surprise for 2024. If we were being led by utilities and industrials and healthcare, I would say the bull market is kind of on its ninth inning. But because tech is still leading the way, communication services leading the way, I know these are Mag 7 heavy weighted, but as long as NVIDIA is resilient, as long as Google is making highs, it's like if our Mag 7 is not doing too much damage to the downside, we have some baked in resiliency, and then we see what this rotation looks like. But remember, the market doesn't money just doesn't leave the market. Like we have outflows, but it's usually rotating into something else. You're going to rotate into cash. You're going to rotate into bonds. You're going to rotate into treasuries. You're going to rotate into boring low beta sectors. You're going to rotate into blue chips and dividends. But money stays in the system. So that is the mindless robot that continues to get flows, and this is why we keep making higher highs, and this is market cap weighting. But like I said, biggest policy disruption to me is if Trump and company lose the midterms, then that could be some big policy changes that the market's not quite priced in now. We can have some major earnings compressions into 2026. And
when are those midterms, Chris?
Midterms. We're going to hear a lot of noise about them probably starting in like September, October, but the election should be in November of 2026.
Oh, of like next year.
Yeah. So
that aligns with data.
As far as what?
Somebody had mentioned to me on a webinar previously that the second year of like presidencies is generally bearish for the market. So I don't know whether that's got any weight to it or not. but
Is it? Because I feel if it's second year, but it's a midterm year, I feel like that tends
that
to
might
be
change it.
pretty like I'll figure it out. I think if it's a second year midterm year, I mean I think for this administration, the midterms are going to be Trump is going to do like kitchen sink fiscal policy to try to keep the markets propped up. It's a huge scorecard for him. If he has the wealthiest, look, unfortunately, even if it's a K-shaped economy and the wealthiest of wealthy are just crushing it in assets, they're not going to vote differently. Like they're going to vote
Right.
to make sure their assets keep appreciating, they're getting paid. But you just don't know what
The
that Main
silent
Street,
majority.
like you don't know what the Main Street vote is. You don't know what the bottom of the K is going to vote, and like that's where you're
Right.
getting like the mayoral election in New York with Mondani and those type of policies. If it's like I don't even care, I'm just going to vote for somebody else. I
I
mean,
know.
if that's the
I,
vote in the midterms, like yeah, that's
yeah.
a very different outcome versus everything's still kind of all-time highs in the markets. You can have noise from Trump, but I think the market does a good job of ignoring it most of the time. If we don't have any tit for tat with China, we're not trying to break something economically. We're not trying to, we're not doing austerity. It's like the Fed is going to jump in line. Powell's done in May. I think the Fed is still going to cut rates. I mean, they clearly backpedaled on their rate cut for December. So let's see that really quickly, and then we'll wrap up here.
And I
By the way,
just
I've
did a
got
little
class in
bit of
2 minutes, so I
checking.
do have to. Yeah, I mean we're
Yeah.
87% for a rate cut in December, and then it's looking like a pause. So this is, I mean, again, they do the cut, here, and then it's a pause. It's kind of a 50-50 now. We got 69, and is it 69-69? Okay, so if they cut in December and then pause until Powell's done, that's essentially how this is going to play out. So they cut in December, then they don't do anything until Powell's gone, and then after that, rate cut, that takes us into the end of the year. So I don't know. I don't think the Fed's going to be stepping in to do much disruption, especially with Powell's gone in May. But anywho,
But yeah,
all right,
you're
bro.
right, Chris. I know you got to go, but you're right. The volatility will come next year. Not necessarily a red year though, because of the midterms.
Yeah, I mean,
The midterms
if we're
throw a loop.
lucky, we have like a great pump the first half of the year. If the market is up like 10-15% first half of the year, I know that seems aggressive, but that gives the market a lot of padding to then just kind of limp in without doing a lot of major damage. Like we can,
Yep.
if we're up 10%, the market could have some volatility and give back some of it, but not necessarily equate to like a negative year. But if we did another 10% year in 2026, that's 20+% 2023, 20% 2024. Let's say it's 15% 2025, 10, 50. It's like that's going on record as like one of the biggest pushes that we've seen, since the late 90s.
And just to reiterate, the midterms will cause uncertainty,
Yeah, for sure.
which markets do not like uncertainty.
Yes.
So
So that
I
volatility,
see
and
your
that's why
case.
my positioning for a lot of this stuff is, I mean, they're so far out of the money through December, January 2026, or I should say December 26 or January 2027. I'm so far out of the money that I'm just like, I'll take on assignment if it's 50% lower, or
Right.
I am positioned mostly bullish through like June, July of 2026. Like if I'm taking on trades right now, like Project Options Edge, selling some puts, selling premium, I don't mind going out like somewhat like summer of 2026 and being pretty bullish on some of my trades. I think, we still have some plus minuses. The market could have a 5 or 10% dump here or there. It could be another weakness window like February to April if there's a heavy rotation in early 2026. But I think there's a lot of baked in resiliency. We're going to have, a bit more of accommodative Fed, possibly. But
Possibly. Yep.
volatility is like a given for 2026. I think that it could end up being fine and somewhere in the middle. But what I don't subscribe to is like the far 50% gains or the crash is imminent, the sky is falling. It's like, look, every day we can navigate this stuff, and there's going to be something we really have to trade. If it is a surprise move, it is an outlier. Typically, prices are so inefficient on those outliers that you tend to get an equilibrium. So even a crash of 20, 30, 40%, load it up at the bottoms, have some liquidity to put into the bottoms, and give it 5 years, and all of a sudden you're back up to all-time highs and you've doubled your money. It's like that's not a bad way to think about it. If the market is down, like just don't be all invested, man. That's why I'm like 50 to 60% cash right now, just in case. So
Ladies and gentlemen, I don't know what the heck Zoom did with their latest update, but it doesn't ever let me hide the chat. It takes me longer to do things. I can't minimize it anymore. Anyways, yeah, so I checked the tracker, Brent, and it's totally good. All those trades in there, they're still open. They don't expire till like next year. So, because I saw what you were talking about, and it is confusing. But no, those trades are all next year. But just to kind of recap here, the pinch point scanner. Okay, if you go to that link, you're going to be able. What is it? Pulled up $14.95, and then it's $9.95 for lifetime. Which I hope Bob hopped on that deal. And then we have a master class today, 2 p.m., which it's actually 11:50 right now. So in about 2 hours, there's a master class. So if you joined, you'll want to make sure that you hop on that, because that's the whole point of the master class is live. Chris will answer all your questions. If you watch a recording of it, you might not get the questions answered that you're looking for. See if I can pull this back up. Nope. Maybe. Possibly. There it is. Okay, there's the deal. So you can hop on that. That's the prices and everything. Everything you're going to get with it. And do you guys have any questions? Because at some point, I will have to leave and go finish up hosting Market Masters. Okay. I don't see any questions in the chat. I think we got to everything on the presentation. So just give us a call if you have questions. We can help you. 904-706-3537. Just reach out to us and we'll take care of you. We'll see you, Donna. Yeah, Maria, there's alerts with this. You just have to make sure that you pick up the VIP because that's going to get you access to the alert.